Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and I'm here today to work with you folks on Thursday, the 21st of March. We're in here to dig around in the charts, see what kind of fun we can have. Well, let's do the quick review, make sure we're live, streaming. I miss my buddy Kirk. Kirk used to be here, first guy through the door every morning. Haven't heard from him. I fear something has happened because poor Kirk, I've not heard from that guy, and he was an avid lover of the community. He was here every morning. He was the first through the door, super excited to be here, and then suddenly he stopped. So, Kirk, where are you? We're worried about you, man. I hope you're okay. But we got new keen people. Victor, welcome. Thomas. We got a couple of other keeners right through the door. I love it. Good morning, good morning. 535. We just hit 500 people like 4 days ago. We're up 35 people already. That's awesome. The community is growing. We've got people that are tuning in, and I love to see you folks spending some time with us and coming over to the Telegram channel. When we're off the air here, we tend to go over to the Telegram and bounce ideas and that off of each other. If you are going to join us in there, I'll just kind of let you know this right off the bat. If you are coming to join us in the Telegram chat, the whole purpose of the community is to be positive, to reinforce positive learning, to encourage each other, have some jokes, keep it light, but we're here as a community to try and help each other out. So I'm going to kind of take that, slide it down a little before I jump into the markets here. So if you are going to join us, please be kind. I'm not going to tolerate trolls in here, and I'm not tolerating negative behavior, or I need validation behavior in the Telegram channel. So if you're coming over there to the community, come over there with some love in your heart, that you're here to help people. You're here to be helped. Be gracious when someone's trying the best to help you out. Be grateful if someone's trying to help you out. If you've got nothing nice to say nothing. It's simple. Say nothing. If you've got something kind in your heart and you want to express it and share it with somebody, please, by all means, that's what we're there for. But if you're negative, take it somewhere else. I'm not interested. Anyway, that's the rough stuff getting started this morning. You can tell I need my coffee getting started this morning. All right, let's go through the charts. It's good to see you all here. Lobo Del Cash, Mr. Ed, hello. Hans, we are happy to be here. Yes, indeed. Thank you very much. And Dave Barry, I loved your charts, buddy. I loved your charts last night. You're really catching it. You're really seeing, even though it's hindsight, you're still seeing the setup. You're seeing it clean. And then the next step is, once you see it clean in the hindsight, because people always say hindsight's hindsight. Anybody can do it. Well, not everybody can do it. Once you see it and you see it, how it's formed, you'll get closer and closer to it, and you'll see it before it forms, and then you'll anticipate it forming. That's the fun stuff. So good for you, Dave. I'm looking right at you, buddy. Good for you. You're doing awesome. You're doing your natural progression. You're getting this stuff. You're dialing it in. I love it. Well done. All right, let's just blast through this stuff. I'll end up with S&P. So here's kind of like what I'm seeing here. We've got this fair value gap that's formed above this little consolidation here. I would like to see us return to the consolidation old high, leave a piece open and continue forward. Here's three scenarios that can happen here today. We could come down to where we've already hit down to. Sorry? Okay, love you. She's so cute. We had our my father-in-law's here, and he was sitting in the living room last night, and he's like, puts his hand to his ear. He goes, I've lost my hearing aids. He lost them at a gas station a couple of years ago. We had to get him new ones. And he's like, I've lost my hearing aids. So we were digging through the couch and looking under the couch. We're going outside thinking he may have shoveled it off to it was in the snow somewhere. We'd have to wait for spring to find it. This morning he comes back. It's been found. It was on top of my suitcase. So he obviously forgot to put them in. It was quite, anyway, 3 scenarios that can happen this morning. We would have return to the top of the fair value gap. It's where we've hit right now, and then kick off of that and continue higher, which is great for all you who are bullish. Friday, we're expecting a little profit taking. We're expecting this little Thursday's reversal. We're expecting a Thursday reversal candle into Friday. I would like to see a dip into the mean threshold. We'll see if that provides a level of support. An old high is a level of support, which is relative equal highs here, or a full fill of this fair value gap here. And if we get a bigger dig down, look into this breaker here, last down close candle on the daily, before we run above these highs. Look for this to provide a level of support. So anywhere inside here, you could be looking for multiple levels down. But right now, the decision is, are we going to pop below this low here, this consolidation? This is just a manipulation leg, and we're going to run back up. This will be a cam 1, 2, and that'll be a cam 3 leg for further downside prices. If we start breaking more than 50% of this run back, then, or through this order block, I'll start to get a little nervous and think we're probably going to run for at least again the rejection block or mid figure and midpoint of this wick. So look for 50% of that wick to provide a level of support. If it doesn't and we close above it, then we're going to continue higher. Then that becomes one of those propulsion candles where we're looking for higher prices. So I'd like to see it dig down, back down in here. So there's multiple scenarios I'm looking for this morning. So we'll see what the conversation's like after Powell's had his little chat. Yammy, or Dow as we call it. Huge new highs here. Look at this, 40,000 now for Dow Jones. It's just looking absolutely wonderful. Lots of cam models here. I hope you guys would like a good cam model. You've got a cam model entry here, right back into a cam 2. This one here, you don't get anything on that one. This one here, you get a full cam 1, maybe a cam 2 in there on that guy. That's what you're kind of hoping for here, is this continues to drift back down to here, or we get a rinse and repeat where this continues to climb up higher. So do we have a reversal happening? Right here, you've got this swing high that occurs. It's a new high. So we have a swing. I don't like these consolidations that occur before swing. I like to see a sharp angle up with that fair value gap on this side, us trade down below it, come back inside it, and then start driving down. These consolidations really kind of throw off that whole theory. So we got a leg that comes below the low here, right there. We trade back inside it. Now, for me, if the body breaks that high, then I tend to get out and wait. Break down below, we show it again. If it comes back inside, that's when you can take it, which it did an hour ago. It came right back into that fair value gap there, and now we're pulling away. So ideally, I'd like to see this continue down to the downside. If you lose this fair value gap here on the upside, we're probably going to go higher, at least for the high and the rejection blocks of the swings that are above you. So again, you got to be really tight with your observations. Don't overshoot and start aiming for the stars. Look for the low-hanging fruit, and it's sitting here nice and ripe for you for the picking if we blow this consolidate or this SIBI here. Oh, tricky Dixie. We did not get a retracement yesterday. We just had a full-on fill or return to this old high here and just rocket straight back up. So we're back into the daily fair value gap again. Look for this mean threshold of the breaker, last up close candle before I run below these lows. Mean threshold to hold. If that holds, which it's pretty close to now, if that holds price, let me just make sure that we are sitting in here. Equilibrium is just above that midpoint right here. Look for that to provide a level of support. If we blow through it on a close today, then we might see a little bit of a retracement on Monday, and Tuesday we'll end up seeing higher prices, and look for this imbalance just above price action here. So that would put more pressure on the downside for foreign currencies. And downside it is. Look at that. So here's the idea about that consolidation I was telling you about that we saw over there in Dow Jones. See how it was going sideways inside that fair value gap? See, I was saying I like to see those really sharp points going straight up like that. This is what I like to see. And then that fair value gap, as soon as we break it on the downside, you want to get, anytime you get back into it here, here, or here, you can get short. And again, it's all hindsight, but look for it. When you see it, wait for it, and then use your fail-safe. If you don't have a fail-safe, stick around. I'll show you mine, and you're more than welcome to adopt it or toss it and just stick to a regular old stop loss. We have I have a stop loss, and I have a fail-safe as well, because I watch price action, and if it passes by a specific point, there's a higher probability it's going to go in that direction against me and hit my stop loss than it will be in the direction I want it to go. So I move to the sidelines, take a minimal loss, move to the sidelines and wait. So anyway, here's the example. We have a run up, we have a new high. We swing above some new highs. We have a fair value gap that forms here. The moment we trade below it, right here, see the body closes below it. Anytime we trade back into that, so you can go here, midpoint, or up in the high of it. And those are your three different entries that you want to use. The fail-safe works best at the high, because if a body trades below it, comes back to the high, find a support to continue higher, you can use that as a point to break even and get out of your trade. I'll explain more about that for anybody who's new in today. So you pop below, you trade back up in. So there's your first entry, there's your second entry right there, and then all of a sudden it just crashes. Now, hindsight, yes, we need hindsight charts to understand what we're looking for. And then as they're forming, you start to develop that next little look into, wait, we've broken this old high here. Now I want to see with this big fair value gap forming here. You'll see me say, I just want a big fair value, a big bold candle here now. I want to see this rip right through this right before it happens. And when it happens, you'll start to see it. Then it's a matter of, do you trust it? Because you got to see it enough times. And once you trust it, you put your 1% of your demo account in there, and you trade it and trade it and trade it until you get super confident of how you see it set up, and you say, that's my bread and butter setup. When I see it, I trade it. My fail-safe protects my 1%. Occasionally I'll get a 1% hit, but who cares? It's the price of doing business. Nothing's perfect. And then you're gonna, the next level of your evolution will be, how do I stay in the trade longer? How do I just nibble off a little piece, and how do I use my fail-safe as a dynamic stop loss? Because it's not just a regular trailing stop loss. It's a trailing stop loss on steroids. It's a whole new different way to manage the back end of your trade. Stick around. We'll show you how to do that. I'll just give you my idea anyway. It's not the only one. If you come up with a better one, please pop into the community and share it with us. We're happy to hear it. And remember, even if you share something that you think would be golden that some people would pay for, you're going to make money on it anyway. If it's so solid, you'll make money on it anyway. So share it with people. Give it away for free. Look at Michael. Doesn't stop him from being a multi-millionaire at all. And he's giving it away, and he's helping other people. Yeah, he made some money on it when he first started. He deserves that. He put a lot of work into it. Anyway, that's my belief anyway. That's why I'm here, sharing what I got. It's not going to change. You guys getting rich or getting richer than me because of something I'm showing you doesn't change the fact that I have the same opportunity. Anyway, I don't know why I'm getting so lectury this morning. I think somebody rubbed me the wrong way this morning. Got me started. I've become this, don't you attack my people. Don't you start telling my people that what they're doing's wrong. I'm fiercely loyal to people. I am terribly, fiercely loyal to the point of like stupidity. I'm loyal to my friends. I'm loyal to people who are loyal. So don't attack my family. Don't attack my people. Anyway, where are we at here? So we're looking for further downside if the American dollar pushes back up. Now, if we do get a retracement back here and it starts to pull back into the range now that we've hit close to the mean threshold of the breaker and we don't get another run up, then look for a further retracement back down into this order block here. It is a breaker because we have a last down close candle before we run above these little highs here. So it does create its own swing point. So if we get a return back here, we'll be between these two candles, this one and this one on the daily. So you got to look for opportunities like that's not one there. Unless you look for an immediate rebalance. And use the ICT index.io. If you ever want to get something clarified, you can come to me. I will do my best to answer the question, but if I can't give you the ICT germane answer, I will direct you to the ICTindex.io. Go there, hit that, put it in your favorites. It is the be-all and all. That's all we do here is ICT. We do not do anything else. We're not into Wyckoff or Bollinger Bands or any of that other stuff. We're not into fancy indicators. The only indicators you'll see on us is the ICT for Life, one where they outline the highs and lows of each market, like Asian market, the London market, and New York Open, that kind of stuff. All it does is just highlight that. So we're very clean on our charts. We look for specifics and our entries. No crazy lines and fancy computer dots and charts, and it's all noise for us, all noise. So on the lower time frames, look for, because we're stuck between these two, you're trying to trade intraday now. So it's a Friday. Most people should just kind of move to the sidelines and wait. But if you just can't help but get into the charts, look at the 4 hour, the 1 hour, and start looking for an opportunity to retrace back into this candle, or again to drive back up in here. You'll find a switch in the market back down in the 1 minute chart. That's where we stay. I can tell you when the market's changing directions by the 1 minute. I'll know it way before you'll know it. So that's not bragging or anything. That's just when you look at price action, you can see when it switches up on you and when you're bullish and bearish. And when you get to consolidations, you'll hear me go, oh, I'm bullish now. Oh, now I'm bearish. Oh, now I'm bullish again. You're in a consolidation, so it's going to jump around until it finally breaks out of there. I'm very lectury. I can feel myself just rambling today. Oh yeah, so we went to Euro. So we've already traded through the mean threshold on a wick through this candle. We haven't quite hit the rejection block yet down here, and the 4 hour inversion fair value gap. See how we just tapped the top of it? And I'm getting a nice reaction off of that. If we stay up on top of this, if we close here today, I'd like to see that just tap it one more time on Monday, and then start to move up and start digging back into here. If that breaker on the Dixie holds, mean threshold, I'd like to see that just run above these little highs here, clean out some liquidity, and then further continuation on the downside, blow through this mean threshold here and start pushing for lower prices. That's ideally where I'd like to see it go. But a lot of things got to happen between now and then. Look at all these pushes up here. That American dollar's trying to get up there, right? Look, it just barely took out those highs. So we still have relative equal highs. You have a low resistance liquidity run, a high resistance liquidity run here. So I'm expecting this to kick back in here. into the daily fair value gap again, and once again come marching all the way back into between here and here. Now that we've got up on top of it, if we do find support today, if we stay closed above that, find some support on it, look for another big drive up into higher prices. But that would tell me the US dollar's got a lot more strength yet to get up there. That means be pushing through that mean threshold of that breaker. New Zealand dollar. As the American dollar pushes up, we're digging down into this order block here, into this breaker. See how we run all the way through to the bottom of the breaker, which if you look at that from the Dixie perspective, and that we're just short of that mean threshold on the breaker. Look right here. There's just that last little piece there. So when that touches the mean threshold here, see that right there, that little piece? Finish off touching the bottom of this breaker here on the, oops, sorry, over here on the New Zealand dollar. Now, the Aussie dollar is a little stronger one. Hasn't taken those lows out yet. You see that? Now we've just come back to the top of the daily fair value gap, and we're getting a bit of a reaction off of that. That's nice. We have validated this order block here on the daily. So I'll look for a return to here and a pushback. So if this ends up just being a wick, we do have a last little return, the American dollar starts to give up its price, then we'll see this turning into a big wick here for today. Again, we're stuck in the middle of inversion. We have a swing above an old high. See, that's the reversal pattern. Body trades below it right here. We trade back up inside it all the way up to here. Stop loss will be sitting up here, 1% leverage, and then it finally comes back down. Start unloading your position here, unload the position here, or at the fair value gap, whatever, or the breaker, whatever you want to use as your exit points. I can't tell you what you should have for your exit points. They're entirely personal, and then whatever you want to make them. And that's the kind of thing that you'll make very germane or unique just to you. You'll sort that out in time. Japanese yen, look at that. Just looking for those old weekly highs. Look at that. All the way back here. We've got these triple tops happening right now. There's no way they're going to leave that untouched. So it makes you think that, is the American dollar going to give that one more run? If they don't, then we've just come into that rejection block again. People are saying, we're taking the highs for sure. And then all of a sudden it just hits the rejection block. That's why I'm a big fan of pay yourself at rejection blocks. Then it turns over, comes back down. Look for the CAM 1 model here. We have a CAM 1 model right there yesterday, snap back up, and we reach for that old high right there. So if that's your CAM model entry you just made in one day, it came down, supported you, dug all the way down into your CAM model 2, right on the money, kicked off of that, and then you're running for rejection blocks and old highs. So you get that. You would have both of those all in one candle. Today you would have got validated above those two there as well. So beautiful CAM model entry. If you're a CAM model trader, then that's your area of expertise. Then you'll get really good at CAM model training. And if you say, what the hell's CAM model training? That's not an ICT thing. You're right, it's not. It is, but it's not. ICT, all the models are ICT entries. They're just called CAM models because ICT never called, Michael never called them anything specific. He just said every time we have a consolidation, we have a manipulation or an impulse like above or below. As soon as it returns back to the top of it, that's a model entry. It can return back into the midpoint of it. That's model CAM model 2. So it's called consolidation attack model. That's just something, a name I gave it. So they're still ICT things. So CAM model 1, CAM model 2, and model 3. He never really talked about a model 3, but we just added it to the equation when you have that manipulation leg, and then it drives down. CAM model 3 is 50% of that leg. You can see it in our videos on our channel here. You'll see down there somewhere over there. Look for the consolidation attack model. It's the only one that doesn't have the main page on it. It's a clear one with the CAM models. Watch that, then come here and I'll show you how to finesse it. That'll give you the basic setups on what a CAM model looks like and how to enter it. and they happen all the time. Cab model people are just collecting ducats all day long. I'll show you how to set up a fail-safe inside there. Remind me, pop into the little tab on the side there and have a chat with me, and as they're starting to form, I'll give you ideas on how you can finesse that, and then you can run with it all you want. Boy, I'm running a little late this morning. Okay, so we've returned to these old highs. You're still inside this range here right now. We've just popped below that consolidation. This is what I'm fearing for in New York, in that NASDAQ right now. We just come down, tap these things, and start running back up again. So we have this order block has been validated. We drove down, come back up, tapped it, came all the way away, hit the bottom of the fair value gap, and now we're in between this high and the bottom of the fair value gap, or the top of the fair value gap right here. So the next level I'd like to see is at least the mean threshold of that, and a return back to this, the body of this candle here. Well, that's pretty much hit that already. Now at New York Open. What do we got here? The gold. Gold's in a consolidation. We just ran that high out. So I'd like to see this manipulation run down. A nice big bold candle down today. Pop back up, find some support at this, and continue back down. We have run all the way down into this old high right here. That's a consolidation. That's where we can find a level of support. If we come back off this order block here, which we have, we want to snap back, look for the rejection block. I'm in here today. Really tight little range between that candle's high and the rejection block. So if we come back up here, if you start to lose, dig into this rejection block, look for 25% of that. So take your fib tool, pull that into quarters. If you get 25% and it starts to really react off of that, and down at these lower levels, you start to see the classic reversal pattern starting to happen, take it. Like here's a reversal right here, right? When the body trades below it, right there, you trade back up inside it, and then you get short. So that's copper. So you're looking for copper to return back to these old highs here today and dig into this fair value gap. So you have mean threshold, that's your next one, and then the close and old highs. So that's what you're looking for in gold. If you start reaching up into here, you're looking for 25 and 50% for the reversal to happen on the lower time frames. So these higher time frame charts, they're played just like a regular 1 minute chart, and when you see a nice clean setup on the 1 day, man, you've got bank. You get to bank all day. You get to say, well, it's heading down to here today, so any entry I get for a short, I'm going to take it, leave it. I don't care about retracements. I'm going to walk away, put my stop loss down there. I'll leave the charts and go enjoy my day with my family. Or go help out at a soup kitchen or do something nice, you know. Silver futures. Silver, you're between this order block here, which is a breaker. Is it a breaker? No, it's not. Just a big order block. So we're between here now and this candle. These two on the daily. We have popped below this fair value gap now. It's now becoming a daily inversion. You come back, find support at it, look for further downside prices. You don't want to see the midpoint of this give way. If it does, look for further prices inside the range to reach for. And look for your inversions in that over here as well. Silver, copper. Copper, we're still looking for, we talked about that already, which is looking for these old highs. A return to consolidation. What we're seeing here is what we're seeing here. Return to old highs. So you want to see that, and we're going to see it react off of here now. So you want to get above this point right there, come back, find some support at it, and you'll start pushing higher. So look here for this inversion on the daily on palladium, if you're trading palladium, to go higher. Otherwise, if this order block gives way or this fair value gap fills, which is my next objective, we'll talk about the rest of that because it shouldn't get past there today. You're not into Royal Bank stocks. You guys aren't into ETFs, Bitcoin, anybody's into Bitcoin. I love Bitcoin. I don't trade Bitcoin. I would never buy Bitcoin. I wouldn't do all that stuff in it, but I tell you, it's going up and down like crazy. And if you can't see that there's some gorgeous setups in here, you're not ready to trade Bitcoin. You're just not ready to trade it, because it can beat you up really bad. And if you know how to trade reversal patterns and cam models, I tell you, there's some beautiful setups in here, like just lovely. Like even just this guy here, I ran above an old high here. There's your swing point. There's the reversal. You're looking to get back up inside this range right here. Body trades below it. Look at that. Right back up. Tippy tap it. Look for the rejection block. Comes back up. Creates another one here. You pop below it right here. Pop back up into it. Hello. Click, click, click. You get to collect all those on the way down. I love them. They're just delicious little entries as long as you run above an old high. So if you don't know the reversal pattern, I will show you the reversal pattern. And I tell you, this Bitcoin, and this is a 1 minute chart, the Bitcoin just gives it to you bottoms and tops and consolidation models. There's a cam model entry right there. Boom, run for that low, takes it out. They're everywhere. Once you see them, they're clean. And they're all hindsight. But we've already talked about the levels of experience you'll get where you start to see these things forming. When you get into consolidation, you go, ooh, I could get a cam model entry here when this thing finally busts out. So you just get your popcorn and wait for the movie to start. Okay, that said, let's get back over here and see what kind of deliciousness we've got forming. So again, I'm looking for a dig down into here. I want to see this fair value gap start to get eaten up. Dig down in here. Ideally, now that we've run the highs, this is my idea for next week. Don't have any proof on it yet, but here's my idea. I like to go PD array to PD array, okay? I like to look at the range that I'm in, and I'd like to say, here's an array we've just hit in a premium section. I want to aim for the next PD array in the lower half of this range that mimics the one I just took out. So if I've just taken out highs, where do I want to aim for? You're in a consolidation here. Where do I want to aim for? You've taken out a high. What have we got down in here? And we've got this fair value gap isn't finished. We've got these relative equal lows here. We have a breaker sitting down here. So we've got a long way to come back into here. So I am short for the short term. I'm short on the long term to get there. I want to get back down into this thing long term. So in the next couple of days, you know, today, Monday, Tuesday, I'd like to see you're going to see some up and down candles going on here for the next couple of days. They are Monday, Tuesday, Wednesday, and then Friday. They're all candles that can make a swing point. So we're going to see some consolidation in here. We're going to see some swings. So we're going to see a swing below here. I'd like to see this really dig down and create a swing down in here around Thursday, and then the reversal of next week. So I'm anticipating that we try to get down here. If this blows through 50% of this wick today, forget everything I just told you. We got more upside to go. And this is just another big breakaway gap. Now I don't want a big breakaway gap to form just yet. I want to come back in here one more time. We catch the bus, come back, come pick us up. We'll take the bus for a ride out into the future. Whew, that said, a little 7 minutes into the new chitty chat. So let me just say hello to people, 45 people this morning, and we're only 7 minutes or 37 minutes into the show. And look at that, 45 people. I was looking back through my statistics the other day, and it was saying that it took me 3 months to get 10 followers. Then it took another 3 months to get, I think it started off the new year on January 1st with 77 people. And I was lucky and I broke 10 people watching our show. On average, 10 people a day. So it broke double digits back in November. That's the first time I ever got more than 10 people in on the show. And look at this, in the first half an hour. We got like 40 people in here. This is awesome. And look at all these people, lovely people popping in. Thomas, Lobo, Mr. Ed, hello. Do you guys remember Mr. Ed? This is really dating myself now. Mr. Ed used to be a horse. Not that you're a horse, Mr. Ed. But Mr. Ed used to be a horse that used to talk to people. He had a show on TV. It's black and white back in the day. When I was a kid, we used to watch Mr. Ed. Christian, good morning, my friend. And Kitty, husband and wife team in here today. Good to see you folks. Hans, we're happy to be here. Good morning all. Dave. Edgar, good morning. Richelieu, hello. From Russia. We have our Russian friend in today, Richelieu. Welcome. Thomas, I was up at 2 a.m. and I saw the move down and then the move up that it's doing now and got scared that it would turn around and go against me, so I got out early. But I did manage to get a few hundred. Good for you, Thomas. It's that fear of it turning against you. Well, you'll learn when to recognize that the fail-safe is your friend. Your fail-safe is truly your white knight. I like to consider the fail-safe as the white knight. If you ignore it, it's not there. You've sent it off to gather, pick flowers in the fields. It's not going to do its job for you. You just have to rely on your stop loss and fear. So what you're feeling, Thomas, is perfectly normal. That will come, that will lessen the more you get confident and the more you have a battle plan for taking on the markets. The more confident you are and the better you are at reading price, the better you're going to get. And all that stress will start to fade. You'll start to go, I feel so much better because I know what I'm looking for and I know where my fail point is. You don't just put a stop loss in there and just expect it to hold you. You'll see if that stop loss gets hit, it's because my fail safe, we've changed directions and we will change directions right there. If I break this spot, I'm on the wrong side of the charts. It's going to take my stop loss. I'm out right here. That's what the fail safe is for. And some of you may be sitting there going, you can't do that. I'll stick around. We'll show you how you can. Spartanberry, good morning. Ivom, good morning. Happy Friday. Thank you, sir. Love what you said, sir. True trader doesn't need to sell courses for a living. No, you don't. If you're selling courses for a living and you're not making a living off of what you're selling, then what you're selling is shit. How's that? Almost sounds like something you could put on a poster with my mug. Happy Friday. Greetings, friends. Morning, Darren. Mastered T. Hey, Mr. T. I haven't seen you for a while, buddy. How's things? I hope you're doing well, man. I hope you're just killing it out there. You got some great ideas. We had some great chats, Mr. T and I. Welcome, my friend. Morning, Theta and all. The ThetaWave Village. There's my buddy, Derek. He's always like that little light in the tunnel that you go, ah, it's something you can rely on. He's always there. Thanks, Derek. You're my man. Glenn Power, good morning. Iggy Pop, Iggy Pip. Roberto, good morning. Mr. Ed, James Sims, good morning. Jack Sims. Sammy, hello. Good morning. You are live here. I just came back from work. I work 5 a.m. to 7 or to 1400 with IT in Sweden. Wow. What time is it over in Sweden right now? Look at him, dedicated, coming into the charts. That just, that warms my heart. Somebody's actually that interested in what we're doing here that would just come home after a hard day's work and then just get right into the charts. Good for you, buddy. Fernando. Good morning, Fernando. How are you? Yakov. Hello, Yakov. Good morning. Okay, so as you can see here, we got some. How's my volume? Do I need to crank it up? Can you guys? I know the fans go. I can see it about minus 55 decibels there. I can hear the fan going. Unfortunately, I can't do much about that. But can you hear me okay? Hopefully you can. Oh, I never did share my idea with you. Well, I think I did. On how to practice when the markets weren't over and I had nothing to trade on the weekends. But now we got this Bitcoin to play with on the demo chart. It's fun. It's a great practice. Bitcoin's a great place to just blow demo charts and practice ideas. Or really use your idea that this is real live money. If you treat a demo account like it's real live money and just you want to save it, you don't want to see it just get blown out, throw 100 lots at something just because you can, and it doesn't matter, there's no repercussions, then you're not really trading a demo account. In my eyes, you're not trading it as solidly as you could. Treat it like it's real life money, that somebody is, you've got all these investors. I look at it as people, all these investors have got together, 10 people and given me $10,000 each, and they want me to turn that into something, save their family, help their family. So I try to picture something around it, so I've got something that I can put some value behind that demo account. So it's more than just, it's mindless money. If you treat it that way, when you get to your live stuff, we always practice, and this is from the Snowbirds. They're a flying group up here. They're like the people that do all those patterns in the sky, and they go out to all the flying conventions and stuff like that. And they do all that stuff. They're an elite team of pilots, and you'll see them literally sit in a room together, and they will close their eyes and they will fly the pattern in their minds perfectly over and over, and they'll talk, and they'll all just sit there and they'll close their eyes and they'll picture their entire flight routine. They rehearse it before they even get in the plane. So it's like you hold that inside your mind in a positive way. When you get out there, they execute their maneuvers absolutely perfectly because they're just replaying that neuro set in their minds. So if you create a demo account that doesn't really give you a lot of, you just look at it as, I don't care, then there's that sense that you don't care every time you enter into a trade. Does that make sense? You want everything, the whole package. When you get into the ThetaWave mindset, you want the perfect trader, the ThetaWave trader, the perfect mindset, the perfect execution, the perfect recovery. If you're wrong, nobody has it perfect, but if you have the perfect kind of mindset and entry, and if you say, yes, that's my entry, that's my exit. If it fails at that point, I'm going to get out with the most minimal or break-even loss. And I move to the sideline. I'll wait for my next ideal setup. And discipline. Discipline is the key level in all of that. But really, setting your mind will determine whether or not you'll make it or break it. Really, it's reading the charts ends up becoming a lot easier than you think, because the next level of your education or the next level of your trading is getting past this and greed and fear. Sorry, I'm very lectured today. I can feel it. Someone fired me off this morning and that was it. Go into lecture mode. So we're just waiting, just sitting around here watching candles. I'll show you minute by minute. Those of you who are new, I will follow my promise. I will tell you minute by minute what the candles are doing right now. It's not worth a big lot of analysis because we're going to wait till 10 o'clock. So I'm looking for another big dive down in here. See this? I want to see it start to pop right back into that fair value gap one more time. So I'm looking for an ideal kind of swing point setup. So 10 o'clock, we may see another run back up here, clean this lot out, look for that reversal pattern to get back down into here. So we're inside this range here. Look for this order block. We run here. It could be the parent order block of that whole run up. It's the lowest body down close candle, so you could look at it as some level of support. See how we're snapping off of it here? Down, down, reject. So now we'll get back into this range here. If we break above, you know, these little candles here, they're broken above already. This guy is here, that guy is there. So see how we're kind of back and forth. Bear flag, people say we're going to keep going down. Absolutely, we could. You got to get through the mean threshold of this candle here on a close. And then look for your rejection blocks, and then it can turn around and come right back up on you. So if you think it's going to run these lows, you're going to get disappointed so many times when the rejection block holds price and it reverses on you. That's why we always say run for your rejection, because you don't always take out the high you're expecting. Yep, you may have taken that one, but you don't clear out this high if we're saying, oh yeah, we're definitely going to take it all out now. We're going to run up here. See, you were rejected right off the rejection block right there. And then we're right back into the bottom of the range again. So if you overshoot your PD arrays, you're going to get your ass handed to you so many times. And there's discipline there, because your greed is going to want to push you past too many PD arrays that are above the premium you got, or well above the premium you could be taking profits out at. And I 100% agree with Michael. Pay the trader, man. There's better money in your pocket than having it come back and take out your stop loss right now. Or unrealized profits that you didn't take right there. You did not take them because you kept thinking it was going to go up and take these highs out again. I'm looking for a reprice rebalance here. This is a reprice rebalance off this candle here. Quickly come back, snap back. So I'm looking at this area here when we have a reversal. Body trades above it right here. You trade back into it. Stop loss is down here. We don't want a body closing below here now, inside this range. This is a reprice rebalance. It's actually considered a fair value gap. If you're not into ICT stuff, you'll see it many times in these tight consolidations. But when you get it in a swing, it becomes important as a level to look for. Here's an example of, here's one where it fails. Let's look at this, and then you'll see why your fail-safe has got to protect you against your stop loss. So here's your stop loss here. We're still waiting a couple of minutes for the markets to do we have a swing point right here. Watch here. Watch this. So just so you know, here's where it fails, okay? We'll put some sticks in here so you get this. I'll give you a bit of a lecture here. You see this here? You see here, Key Darren, here's a swing point. And it's going to fail. Here's some things to look for. Here's where you finesse it. This is why you pop into the show, and we'll show you what you got to do. So if this is the swing point, and we've taken out this little low here, and that's our break-in structure, or in other words, our reversal happening right here. Now it reverses, and you say, okay, first of all, if it hits your objectives before you get a chance to get in on it, that weakens its grip, but you can still make money on it. So just wait. Let's say you missed that and you say, I still want to go for that high. I still believe it's going to go higher. That's fine. Let's say you thought it was going to do this. So you go, okay, so as soon as it returns back into this level right here, I'm going to take a long. I'm going to go long right here. So it comes back. We have a body trade above it. So you're like, woohoo, sweet. So the moment it comes back into it, you may get in there. You may get in midpoint. Or you may say, I'm going to get in right here because this is where my fail-safe is going to support me. So you get in right there, and then it trades back up and trades back up, and then all of a sudden it just goes boop and rips down there and comes back up, and you go, ooh, I don't like that. I want to see it get out of here. I want to see it get some legs here, like this. You want to see it get through this and go. But you don't want to see it take out your rejection block just yet, because now all of a sudden it's... But this is that 10 o'clock thing I was telling you about. You want to see it come back up here. So when you see this body here go trade below, and it closes below this point here, it's telling you right there that we're going to run the lows. Now, it's easy for me to say because I'm looking in hindsight. Here's how you get out. As soon as it opens like that and or closes like that, you go, it has to return, or usually returns to, and most of the time it returns to an inversion to find support to go lower. So here's your failsafe. Your stop loss is here. Your failsafe says activate this. If it returns to you, you want it to return to you. All the time it's running back, get out of your trade as soon as it comes back to you. You get out there. How you finesse this yourself is entirely up to you. For me, if it opens here, if I see it starting to trade below the low that it just got out at, or comes back through the opens, if it starts to run back up, I'll be all in it. As soon as it comes back to my break even, I'm out. So I'm break even there. Then all of a sudden it goes, comes down and takes you out right there. Break even versus your whole stop loss, 1% risked to go long. So here's a great example where a fail-safe will save you at break even versus stop loss. If you don't believe me, go back, try it yourself, and find your way to find what works best for you in terms of how you finesse this beast. There's many different ways you can finesse it, but that's my rule anyway. As soon as a body breaks below that low, I'll catch the next candle back to my inversion, and I'll get out there at break even and wait for a new setup to occur. So here we are coming up for 10, looking for these highs that get taken out. So turtle soup here. I'd like to see a turtle soup. How many people are going to turtle soup this one? And then roll right back down and continue on the downside back into here. The fear is that we just come back to the top, right where we're sitting here, which is right on top of that order block high here, and then start to react and go back up again. So right now I am bullish because we've broken this spot right here. And I will reserve the right to change my mind once I see it go bearish, and I'll show you where it goes bearish. So what you want to see, this is how your mind, you want to start thinking about this as it's happening. What do we want to see? We want to see a rip through here, create a fair value gap, and then rip all the way back through that fair value gap above these old highs. Get in on that for a short. Then you're running from there to this guy here. I'm setting it up before it happens. That's what I'm looking for. So I don't care about anything else. That's what I'm looking for right now. If I don't get that, you sit there, you twiddle your thumbs, drink some coffee, eat some more popcorn, and wait for the movie to begin. It's a simple little setup on a 1-minute chart, but it will tell me whether or not the market's going to continue to the upside or whether the market's going to turn around and start coming back down again. I'm looking for the reversal up here before it happens. So this isn't hindsight now. This is using all that hindsight knowledge we've accumulated and applying it as it's about to happen. So we're already anticipating what's going to happen. Let's get back to the hello. Look, 56 people now. Welcome, all 56 of you. Volume is great. Thank you very much, Christian. Lewis, good morning. Yep, can hear you fine. Thank you, thank you. Happy Friday. Good morning, everyone. Tristan, I love it. Love happy people. Maurice, good morning. Ready for the next tip, of course. That I am, of course, that I now, I know that you are not. Oh, Maurice, you want to give me a tip about how to trade the markets? Okay. If it's ICT related, I'd love to hear it. But my eyes kind of glaze over if you start throwing some retail stuff at me. and I won't understand. I won't even take the time to understand it. So, not that I disrespect what you're doing. I just, in order for me to fully understand something as intensely or clearly as that, I really need to get a better feel for it. And I have no interest in retail, and that's not what this channel is about. We are pure ICT here. We are not retail people here. So, Derek, I'm more of save the Derek's not into turtle soups. He's more into save the turtles. Oh, Derek, you slay me. That's funny. Derek, you're always good for a laugh. Dave Barry, another great explanation of the Derek discount and the Darren's failsafe. I am clipping that one. Thanks, Dave. Hans, TGIF Friday, 20 to 25 to 30, my friend. TGIF Friday. Wouldn't that be awesome to catch a TGIF Friday right in here? It becomes the high, and we get the New York AM to take out the low or the high. We're at 8. Here's your 10 o'clock. Little pump up above here would be nice. We don't have a... I want something clean, a nice clean run above these highs. And then a snap down. Disappointed that you didn't say eat some scrambled eggs. I'm surprised by the Egg Producers Council. You said twiddle your thumbs, drink some coffee. Should have added eat some scrambled eggs. Yes, Derek has the scrambled egg approach to every morning. It works for him. Keeps him bright-eyed, bushy-tailed. I'm in this constant fasting thing where I drink coffee. I try to fast every day. I'm trying to get rid of all those years of sitting on my butt, just being in pain all the time. It's nice to finally get up and do a little bit of moving around. But what if I tell you that the price you see is not real? Am I supposed to be intrigued by that? The price I see is not real? Is there something, a shadow price behind there, Maurice, that I'm not aware of? Do you know that I see a different price than you? You might, on a different chart, you might see a different price than me. And if so, my candles look different than yours. Then you're on a different chart than me. Your broker is on a different, is giving you a different feed. This is live data right from CME, man. So I don't know what yours is, but anybody who's on TradingView should have the same data feed that I have. And I can't interpret your candles for you if you're not seeing what I'm seeing. But if you focus on what it is that I'm telling you and what I'm showing you, it doesn't matter what feed you're on. If it's the algorithm, you'll see exactly the same kind of setups that I'm going to see. You may not see the same candles that I do, but all the setups that I show you appear on your charts, just like mine. If you're on an algorithm, if you're on the markets and you're in and out a broker that is watching and monitoring the algorithm and giving you a live feed on that, you'll see the exact same setups. I don't care what. You put me on any broker's account, you'll still see the same thing. Now, whether or not that broker takes a run on you, that's a different story. That's a different story. Because I know not all brokers are honest people. They'll take a run on you. They'll hold your account in-house. They'll trade your money against somebody else's money before they send it to market. Other broker houses will send it straight to market because they're there to make money off your commissions and not play around in-house books. But there are a lot more shady people out there that do some things. So find yourself a decent broker. I won't give you a suggestion as to brokers. That's your choice. So, sorry, Maurice. I don't agree with you. And so my candles look differently. Yes, they do. And if my candles look different than yours, and the bank also has different ones, doesn't matter. It doesn't matter who's got one. Look for the setups, man. It doesn't matter if whose chart's different. These setups are the same on all your charts, on wherever you're at. If you're on an algorithm-based market like NASDAQ futures, you will have, and I don't care if your charts are different than mine, you will still see the same kind of setups no matter what. That's like saying your chart looks like this, and my chart looks like this. I don't care. If your chart looks like this, look for the setup. Look for the setups. And with the setups, you'll still see the same setup on yours as you will on mine. I may not have the same looking one as you, but the setups are exactly the same. You may not believe that, but stick around. And if you still don't believe it, find someone else that supports your theory, because you won't find it here. Sorry. How many decisions if everyone sees something different? I just explained that. If he's seeing a different price, it could be data not adjusted for rollover. Again, look for the setup. Doesn't matter. Doesn't matter if you're getting a different chart than me. The setup is the same. Here's that run above the highs that we're looking for at 10 o'clock. Still bullish. If he's seeing a different price, it could be data not adjusted for rollover. I don't know any of that. I don't know adjusted data. I don't know. I just look at the charts and I tell you, as that candle, whatever candle is forming for you, is it forming above or below or this? See, I could have a completely different data than you. Does it alter how I treat this chart? It doesn't. If I was sitting here in front of my data feed and this was your data feed, I'd still treat it the same way. Exactly the same way. You may not be able to copy what I'm doing here, but look for what I'm showing you. If you see what I'm showing you on your data feed, you will see the same thing. You just may not see the same setup as me. Am I making that clear? Does that make sense? Hopefully you guys understand what I'm trying to say there. Oh, someone got moved. I got my monitor, my steely-eyed monitor, once he's had enough of that stuff, he's out. You're done. You're not supporting the thing, so I fully support whatever decision he makes. So Maurice is not sure, but if you trade FCDFs, it's different price than the futures based on your broker. We do not trade the price. We don't care about price. We care about how the algorithm moves price. Right. We trade the same at cent stock than a cent stock as we do at a dollar stock. Yes, good. Funds are regulated by CME. Yes, 60 people. Woohoo! Hit the thumbs up, team. Fernando, I see on my screen what Darren is presenting. Do you guys see what are you guys all on TradingView? CDFs, futures, crypto, forex, all the same beast. Yes, it is. It's all the same. It doesn't matter if your feed. His feed could look like this. I don't care. It doesn't change. If his feed looks like this and mine looks like that, I don't care. It doesn't matter. You're still going to see the same setups. If you're algorithmically driven and it's not somebody else's, you're on somebody's little fake account, then if you're on a CME paid for data service live feed, this is what you're going to see. And if you don't see this, talk to your broker. Or get yourself a new broker, lad. One data, level 2 data, etc. Setups all form even in commodities. Yes, they do. Hit the like button, Richard says. Derek, Those who want to understand can understand. Those who don't want to understand, it won't. True enough. Thanks for that, Derek. Fernando, please don't get distracted by unrelated topics. We're in the ICT church. Lobo Ducas, yep. Good morning. Young, good morning. Time and price. London low at 50% of the gap. Down, yes, agree with you. That's all we need. That's all we need, my friends. 65 people. Look at this big old swing point here. Look at that little tiny piece right there. Do you see that? Did you guys see this? We were calling it here. We were saying we want to see that reversal pattern. That's something nice and sharp. Look at this right here. Body trades below it. Look at that. Dirt, dirt, dirt. Right to the midpoint. We've hit it. Stop loss moves to here. Your fail safe is right here. Or sorry, your fail safe's right there on the other side because you're looking for, if we break the upside of this, then we've reversed. So now we're bearish. We were bullish down here. We said we wanted to take out those highs. We took out the highs, and then we said the setup would be a nice sharp run up and a body down with a little fair value gap. We got that. We reversed to it. There's your entry. You can continue down. This fair value gap, you want to see it give way because it's in a discount. It's the discount fair value of the premium inside this range. So watch right there. See how it's tapped it? So pay yourself here a little piece. If you've got lots on here, just take a little portion out for yourself and move your stop loss to just above this area so that if the fail safe fails, it comes back to a break even and you can get out. You want to see this give way because we're looking inside this range here right now. This is your breaker. That's your run above. That's just a normal order there. This is what you want to see. Just come on down right now. Blow right through this guy. Blow right through it. We want to get on the underside of this fair value gap. So premium discount area, right? So you've had the premium set itself up. You ran below it. There gives you your entry. And we're looking for further downside prices. That has nothing to do with hindsight, but because we studied hindsight, and I was calling it down here saying I'd like to see it run back up here for 10 o'clock, then I'd like to see this setup. We talked about it before it happened. It manifested. That tells you that once you understand price action, that's what you're going to see. You anticipate it happening before it happens. So why aren't you in it, you're saying? Because I missed it. I was too busy talking. But that's okay. I don't have to take everything, but the fact that I explained it to you and it happened, it manifested right there. Now you should be paying yourself at what? Rejection block. Remember what we were talking about? The reversal. You're going from here to here. Pull your fib tool. Here's another way you can manage this now. You can take this fib tool and you're going to do what with it? How many are taking your fib tool and trading off your fib tool? So if that's the range, and this is, you're trading from swing point, turn, go down, swing point, turn, going up. You trade from one to the other. If you blow through this one, now you can get excited and expect more downside run. Otherwise, you're trading in a small little range to grab your money and move to the sidelines. Did you take money out at 50%? Did you take money out at rejection block? Because if you're aiming for the low and you're aiming for the breaker, you're about to get squeezed. So if you took your 50% and moved it to break even, if you took the low here and moved it to 50%, you're out of your trade. And you've just collected from your entry, which was right here at 550, all the way down to 32. You got 18 handles. If you took it out here, there's 20 handles in 3 minutes with practically zero drawdown. Just saying. I'm just saying. Now, if it comes back here again, you get back in and rinse and repeat. Do the same trade all over again. Because we haven't taken out the lows yet. We have got the rejection. But now if we come back into here and you collect here or here, I like to see it just snap up into here with a wick and then come back down again. If it closes right here is where you put your neck. Oh, I'll do this one. What the hell? I'll take this entry right here. Sell it. Stop loss goes up here, just so you can see I'm going to follow the same thing you guys are. There's your same entry again. If you want to take it a second time, you've already made money. You've got it in your pocket. Now you're making more money again. Stop loss is up here. I'd slam that sucker right up against break even right now. I didn't get a chance to get in. There you go. If it comes down to rejection block, pay yourself. If it comes back and hits you, that's okay. Wait for another setup. You've already got some bank here. You've already banked some coin on that one. Go on, hit the rejection block and give me some more money. Or give yourself some more money. Bang! There you go. Oh, you got some more money. Are you upset that you're paying yourself here, folks? That you haven't caught this massive rundown? Or are you just chuckling to yourself that you just banked a couple $100? If it comes down to this one, collect some more. This feels like it's going to come into here now. Twice. You got to key off that twice. You got to play twice in your game today. Happy Friday, everybody. Oh, look at that. Pay yourself. Move your trade. So there's your 50%. Take some there or there. Take your next one here. Move it to 50%. If it hits it now, move it to 62%. If it hits here, take it, move it right to 70%. Lock them in. Lock them in. You say, screw that noise. I'm heading down here. That's fine. If that's where you're headed for the rest of the day, move your stop loss to break even. Go play golf. Right now, you're about to get your stop loss take. There, you're out. Okay, so we got 20 handles on the first one. This one here, you got in again at 50. You got majority out at 20. So you got 30 more handles there. And the rest of them all closed out at 25 handles. So far, you've got 50, almost 80 handles in a few minutes. That adds up for people who go, I got an 80 handle run today. Woohoo. Well, you say, yeah, I got it multiple times in about 5 minutes. Does that sound cocky? You pay yourself, people. Pay yourself. Now you've swung below a low. So we can anticipate now that if we start getting a run above here, it's the same thing, rinse and repeat. We've swept the low. If we get a body break above this, come back to it, then you're between this guy and that guy, like we were between this guy and this guy, right? That range, premium discount. We came all the way back down into deep discount, 70, 75%, almost. It's an optimum trade entry to go long, but we're not long until we break this high here. But look at the range. Look at the range. You could practically go through this one, still come all the way up into here. For me, now that I see this, yep, that's the first indication to take profits at your first scale point. So they're almost overlapping. So that would be your first scale, second scale. Your higher time frame PD array is up here. If you get through that, obviously that's a higher run. Pulling back into 50% of this range here right now. Pull your fib tool from here to here. There's 50%. I don't want to see this break to the upside because now all of a sudden I start to look at that as a potential. I reverse my decision and I go long again. That's my linchpin right there for a run for short term, at least to the premium array up above me here. I want to see this order block hold price and this fair value gap hold price and continue further on the downside. So if you're trading this short, here's your fail-safe. Your fail-safe's following you down. If this breaks that high, comes back and taps it, you close your short and you get ready to go long. So you put your stop loss or your entry down here, and then the fail-safe saves you here before your stop gets taken. Again, 1%. We did not get the high taken. We just traded back to it. So we wait, and you're still bearish. Okay? You're still bearish. So here's where that the dynamic. Let me just let my wife know I'm happy that she made it to work. She got to work safe. Hugs and kisses. Always send your wife hugs and kisses. Let her know you love her all the time. Okay. Hasn't closed above yet. Give it time. If your stop loss is sitting up here, you've moved your stop loss behind you. This is why you pay yourself with the fib tool. Again, if you want to use the fib tool, you pay yourself on the way down. You would have been out. Now you sit here, wait for your ideal setup. So if this closes above here now, you can go long. And you're aiming for fib tool again, 50%. Pay yourself on the way up. It's rinse and repeat, folks. And it's low stress. You're still risking 1%. You're still pulling it up behind you. And if you're stressing out over it, it's because you're not super comfortable. See, now there it is. See how it came back and starts to come back. As soon as it breaks through that point, I'm out. There's my fail safe. We traded above it. Now I'm long inside here. That's the turn point. These guys have no idea what's going on yet. There's your turn right there. Now you're inside this range. Pull your fib tool. Pull your fib tool. Treat this like a minute, an hour, 4 hours, daily, wax futures, bunion futures, whatever you're trading on, I don't care. Whatever stock you're on. If you're in a stock that you're just waiting for the optimum time to get in, it's these times right here. This is your stock on a daily chart climbing now. And we're running back inside this range. When you hit 62%, you take your piece off and you move to the sidelines. Or you move your stop loss right up against break even. So if it hits you like this, you're out. You collected that little piece there for a whole day or a whole week or a whole month, whatever damn time frame you're on. Now if it trades back below this again, I'm bearish. All it did was just run back into this range, into a premium, so it could go down. So this is an optimal trade entry to go short. And you collected a piece above a rejection block at 50. You even managed to collect a little piece here. Even though if you entered in right there, took a piece off there, as soon as it hits here, you're up to there. Now you've broken below that low, and we start all over again. You may not think this is a smart way to do it, or you even want to be in the middle of this mess, but it doesn't matter what time frame you're on. If you follow this rule, and I don't want to recreate a Darren here, but wait and see what happens here. If this just comes back down deep and we don't close above this, see now we just came back inside it, you're still bullish. We have not closed below that low yet. So this is where your fail-safe comes in. So if you're, those of you who went long, if you didn't take a profit there and move to break even and get yourself in profit already, you missed an opportunity to make a little bit of cash right there. So if your stop loss is down here, let's say it does. Let's say it is still there. Here's where your fail-safe. We're going to watch this live, your fail-safe. So I'm out of here because it didn't come back to me. I'll close that off. So let's say this, we'll wait for this to close here. Your fail-safe's right here. Stop loss is here. If it rips through and takes you, then your stop loss is there to help you. Your fail-safe didn't work if it rips through and takes you out. If it does, this now becomes inversion. So watch this. This is going to close below us here. Now you're getting squeezed. Oof, like that. Now as it comes back, so now your stop loss gets pulled right to here. Bang, you're out because it's coming down here. So you won't take a full stop loss here. And you can get out. If it runs all the way back up here again, that's how you finesse this. You do that your own thing. That's mine, out. I take my stop loss here and I slam it right up there. So if it comes back below that point again, chances are it can come through and take me out. And we won't get a revisit of the stop loss above us or the reversal. If we do, then great. You decide how you want to manage your fail-safe. That's my fail-safe. So If that from there to there was 50% and I had 1% of my account on there, I only lost 0.5% versus losing the full 1%. Now, somebody else might use a different philosophy here. They might just say, okay, here's my stop loss. I'm going to let the full stop loss go, or I'm going to wait and see if this comes all the way back to right here and tap that. And as soon as it taps that, I'm out, because now I'm bearish. That's the linchpin. You may have the patience to say, I'm going to let that sit there, and now this is my safeguard. I don't care how many candles it takes. As soon as it touches that, I'll get out, or it's going to take my stop loss. I'll commit to that so I don't have to stress out over this point. That might be a cleaner way of managing your failsafe. And the best thing about this failsafe is it's dynamic. You can follow it behind your trade. And as you follow it behind your trade, it gives you the confidence to know if this spot fails, I'm on the wrong side of the market. On the 1 minute, I'm on the wrong side. And you just have to stick around in here and watch this, and you'll see if I'm on the wrong side. I'll tell you when I'm on the wrong side just by watching these inversions. So we're trying another philosophy here, saying, I don't care. I'm going to leave my stop loss there. I'm going to wait for it to come back and tap this so I can get out break even. So right now you're underwater. Your stop loss is under threat of being taken. My method is I get out right there the moment it comes back below the point where it started. So if it opens this candle, comes back up, comes back to here, I'm out. So we're going to use another philosophy on managing your stop loss, your fail safe, I should say. Not your stop loss, your fail safe. We're waiting for it to come back to here before it takes that. If it takes that first, you might like my one better. And you're really getting a tight squeeze right now. And if you've got a broker that likes to open their spread up, they just took you out. If you're that close, your broker would have gone boop and just popped down and took you out to collect the money. And the real market is not giving you the actual takeout yet, but your broker swept you. They'll do it. They'll do it. So we'll continue to watch. Edgar. See, now your stop loss was taken. Now you say to yourself, ooh, maybe there's something to that little thing that Darren had about body trading below, pop back up. I'm out here. So I really only lost 0.5% of my trade. If you didn't collect here and use the proper principles of managing the upside, you see how you even got to collect money in a small little tiny reversal. You use a 50 and a 62% retracement in your fib tool to collect some money and get out even when you're on the wrong side of the market. Even if you're on the wrong side of the market. So now we're bearish. And now your stop loss, if you didn't do this here, you didn't manage it and set it up properly and follow your rules, you took your full stop loss right there. If you use the fail safe, you saved yourself 0.5%. So you've gone from you could have made money to only losing half to losing it all if you thought that that was the swing and you were going to go for up here. This is how well this thing works inside these little consolidations too. Premium discounts. They work good. So we're inside this range here still. We've come back into this breaker again, you see, right here. We're back into that. Now look for the range that you're in. We're in this swing range here. We have a premium discount still way down here inside this order block. So I wouldn't touch this right now. But if you got short up here still and you're still short and you just walked away and you're out playing golf, you've just paid for your round of golf already. And you don't know it, you're at break even. So whatever it does today, you don't care. And if it comes back, if it went all the way down here, came all the way back up and went boop and took you out at break even, you come home and go, oh, I didn't make any money, didn't lose any money. Don't look at what you could have made. You decided to leave your charts. You decided to get a life other than sitting here staring at charts all day. Now we finally visit back to the fair value gap. See how it took your low first before it went back there and finally visited it in a premium array? and they'll roll over and come back down. So now we're between this premium array and this order block here. And it may sound like, well, it shouldn't sound like I'm form-fitting this. It shouldn't sound like this at all. Sorry, these little suckers are really irritating me. I will sit here and chew my nails. My wife told me, stop chewing your nails. And I got to keep trimming them with this my little cuticle thing. Anyway, I digress. Hopefully you don't see that I'm form-fitting this. You see clearly inside the arrays. I'm trying to point them out clearly to you folks so that as you start to study Michael's principles and you come in here and you trade on a 1 minute chart and you read a 1 minute chart like this, all these other charts that you're looking for your bias on, if they give you the bias for the day and you catch a 1 minute entry and your bias for the day is short, you just say, I got it. And in optimum trade time, like 10 o'clock in the morning, running above old highs, I caught a turtle soup up here. Oh, close your eyes. Go out, enjoy your day with your family, your friends, and wait till you move yourself into break even, and then go out and have some fun. Leave your charts alone. You're in the charts at 10 o'clock for 10, 15 minutes. You see that it's running for your objective. You say that because I studied it on a 1 minute chart so frequently, I understand how the price action goes. I can get in on my chart, wait for my entry at the optimum time and price. I'm aiming for down here. I put my take profit down there and I just go. I look for the next PD array on the daily or the hourly or whatever higher time frame you want to set your take profit in. We have a breaker right here, senior candle. You want that to provide a level of support. So if we lose the breaker and we lose this inversion again, then we're back to the upside again. Then you change your mind and say, now I'm bearish, I'm bullish. Right now I'm still bearish, even though we've got this little swing up here. This is still providing a level of support for me. If it comes back to, if you entered in there again to go short, so you got out, oh, you wouldn't have got out. The 1% that you had here, if you enter in again at that low there, or you wait for it to go here, because if it breaks through, you can use your fail safe again. Here, you have 3 different entries to go short. Pay yourself at the breaker, because you're in a small range here. Pay yourself at the breaker, and next order block. You're inside this range now. Don't worry about all this other stuff. You're inside this range. Trade for breaker to breaker. Small little inside. This is not breaker, by the way, but anyway, order block to breaker. You're trading it from premium to discount inside that range. Snap a couple of handles out of there. Take 10 handles out of that and move to the sidelines and wait for a new setup to happen, because it's starting to compress now. So until we break that candle or that candle, we're going to go sideways. We have a fair value gap sitting right here. I want to see a body get below this, but yeah, that would be a swing. I like to see a solid swing get taken out, and then one of these fair value gaps like this over here, solid swing happens. We get in on it right there, short, run for your order block, rejection block, low. You get them all, comes back, or just back into rejection block, comes all the way back up, gives you another opportunity to rinse and repeat, do it all over again. It gives you all of that plus running you out. Then it comes all the way back up and does not give you a third opportunity to get back in. But now we have this reversal happening. Oh, it broke that high. As soon as it comes back in, I'm going to go long. It doesn't touch that, so you wouldn't have got in on that anyway. Then it broke through you. So you go, great. Now when it comes back into here, I'm going to get short. It's already taken out this low. The next one I want it to take out is that one there. So this one that we're looking at 62%, it did not come back to us right there. If it did come back to us right here, you got 1, 2, then it ran through you. And the moment it did this, that's all loss right there versus from there to there loss. And again, if you're adding all 3 of those together, they should be 33, 33, and 33 that make up 1% of your account. If you can trade micros, no more than 1, maybe 2, whatever your risk tolerance is. So that would have been a definite loss if you're looking at this to go long. Right there. 1, 2, 3. All of them enter in. Then all of a sudden you see it close below. You go, oh, I'm on the wrong side. It's decided to come back. So yes, it went long. Nope, it went short. You go, okay, that's what you get when you're in consolidations and one fair value gap. You've got the possibility of running through it back and forth, long, short, long, short. You have to decide whether or not you want to be in the middle of that. If you were long and you got the run down, you come back up, your fail-safe took you out at less than you would have taken had you done the whole hit. Comes back up. Now you can say, now I'm short. Comes back up inside. 1, 2, 3. You enter in again. You pay yourself at the order block. What you lost there, you've just made back here. You got another opportunity right here, here, midpoint, here, and here. So there's multiple PD arrays you can be reaching for to pay yourself at. Because you're in a consolidation, you're still inside this range. Pay yourself, man. This isn't busting out anywhere. But if you're inside this and you're playing these inversions, pay yourself right there at that point, right where it touched it. Pay yourself. If that turns around and goes back up, you're like, crap, it did not take out the low. No, it gave you the payment right there. Suckers. Suckers just keep running for here, and it just comes down, taps you, and leaves. Trust me, we've got lots of guys in here. Lambo and Derek and David, they all see this, the value of pay yourself. The difference between here and here is huge in terms of your win-loss ratio. You wait and see now. If this runs all the way back up here, it'll make my point for me. If it rolls over, then fine. You were right, I was wrong. Cam model entry right here. Come all the way down, hit it. Your cam model 1 right there. Run back up, collect your profits here. Cam model 1 entry again, come back up inside your premium range, collect your profits up in your premium range. We're back into a cam model 1 again. If it comes back up into this range here, 50% of that, I would start scaling it out. You're getting a triple tap into your cam model, and my bias is going lower, so you're just trying to catch all these little retracements off of here, but even those guys are still making profits off of that. As soon as they trade back into that range, take some money, take 50%, 62% on the way up. Cam model again, I see it's coming down, so cam model, hit it again and start trading back up. It's getting smaller and smaller until we run past or through this cam model and to the other side, come back up, find some support at it, come back the other way, trade the other side of it. Yeah, it sounds easy, but I'm just pointing it out before it happens. Took that out. Now if you lose 50% of the cam model, if that's a cam model 2 right there, watch. If I draw from here to here, and I go like this, here, equilibrium, there's 50%, there's a cam model 2. If you trade below that, you use your fail safe to get out. There's no cam model 3 here, it's just cam model 2. You've run the low, you want to come back into this range, take your 50%, 62%, as soon as it hits 50%, move your stop loss to break even. For me personally, as soon as it broke that high, I'd be slammed right up against break even, because you've already dipped into, you've already been in this little pot of gold here a couple of times, take some money off of it. So as soon as it comes back up into, I'd probably slam it right up to break even right now. Yeah, take it right to break even and look for 50% of your range now. So there's a cam model 2 entry, giving it to you as it's happening, not hindsight. Pull your fib tool from high to low. Retracement equilibrium, look for 50%, that fair value gap we were talking about. This has been validated. So now you're looking for padding. This order block needs to get validated. It does. With a body would be nicer. Get me a body, close in above that. Find some support of that. You're back inside this range. Take your profits at here. Move to break even. 62%, move to 50. 70%, move to 62. Just chase it back up because we're going to potentially see this continuation on the downside. All the retail people are like, yeah, of course, it's a trough. We're in a trough-like pattern. See how this would be zero stress trade. You took some money off a 1. A couple of times you're trying to get some money off a 2. You're at a break even, so it's a zero stress. If it comes back and takes you up, it didn't cost you anything. I'd just move it just up into the bottom of that candle to pay for your trade and give you a couple of bucks for a coffee so you can get ready for the next trade. Keep your eye right here. Whew. I'm going to lose my voice here. Silver bullet time. Fair value gap. I'm a little late, Derek. Just catching your message now. Closed and done. Lobo del Cash. Good for you. Nice job, Lobo. Well done. Darren, question. I put a demo limit order at the exact place you did. My question is, because that could be the rejection block, should it have been at the body candle high? Mark that on your chart, Dave. Do a screen capture and send that to me on the Telegram, and we'll go through that one together. I'm not quite sure. Question, I did a demo limit order at the exact place you did. My question is, because that could be the rejection block, should it have been... Did I have it right here? Which order did I have? Oh, I had it right here. I'm not sure. Draw it out, Dave, and we'll talk about it afterwards, and I'll explain that to you. And if you've got a good point, then you got me on that one. So I'm not sure, only because it might have tapped us in. Yeah, just kind of write it, do a screen capture for me, bud, and then we'll have a chat about it in the Telegram thing. Thanks for bringing that to my attention. Lobo del Cash, me too. Got out at a discount fair value gap in 5 minutes. Good work, Fernando. It's working very well. Congrats, Darren. Thanks, Fernando. In 30 seconds, looks great. Message retracted. ES weekly TGIF price points 20% at 52.94. There now, 30%, 52.80. We were tracing back the way we wanted it to in ES. Oh yes. Come down, my friends. Come down to the equal highs. We don't want to see this tip and then go all the way back up. We don't want to see this become the fair value gap. Consolidation. Cam model people are just drooling it at the mouth right here for a cam model 1 entry from the high to the bodies. Cam model 2 people are looking right here. Stop loss is sitting below your consolidation. Either here or here. It depends on where you pull your consolidation from. This low, you may pull it from that low. Whatever you want. I would probably put it right here. And I wouldn't want it to break through the mean threshold of that candle. So 50% of that range from high to here is a cam model 2. Cam model 1 from the high to the fair value gap fill. That's a cam model. I would expect that to come all the way back down into my cam model 1 there because I want it. If I close below 50%, then that's your fail safe for a cam model 1 entry. Stop loss doesn't get taken if we close below that. If you're on a daily, you have to be super patient. You have to wait a whole day if it trades below you but doesn't take out your stop loss. You want it to trade all the way back up the next day, back to your entry, so you can get out. You have to wait a whole day. That's the difference between patience on a higher time frame chart versus a lower time frame chart. Here you only have to wait a couple of minutes for it to come back to your spot because we're trading on a 1 minute. On a daily, you do the same thing on the daily. You have to give yourself the patience to wait another day. That is a level of patience that you have to be super solid inside, man. Super solid. So we're still bearish. Those who got in up here are just going, oh yes. If you stuck around, you said, honey, my golf game doesn't start till lunchtime. Stop loss sits here, stop loss sits here. Why? Because if we break the upside and we change and we're moving in a different direction, if we break the upside, that's where you start to get these things out. So another way you can manage your trade on the way down is, see, we did not get that 50%. Remember I was saying I like to pull that stop loss. You broke even. So you moved to the sidelines. That trade didn't work out. If you look at 50% of that range, if that's the 50% of the range that we were looking at, you traded below it right there, pop back up, you're fail safe, you're still break even. And you wait, you move to the sidelines now and you wait for a different setup. Way better than waiting for your stop loss to get taken. We're looking right here now. We've got a swing below these lows. I'd like to see this one get taken out. But the swing below this low, if we get a body trading above this, then we're in this range. You pull your fib tool, start all over again. Look at 1, 2, 3 entries. If you want your perfect entry and you want to wait for a good discount, you put your buy order in right here. Once that closes in the next 4 seconds, watch where it closes. Do we just come back into the mean threshold of that candle? We did. And we tapped it, and we still have not closed a body above it yet, so we're still bearish. We're still bearish until proven otherwise. And I may change my mind in one candle in the next minute or so. But I want to see a body pop up with some significance and then come back down. And remember, like we were doing over, where was it? Here? That one? When you pop above it, if you come back into it, your first exit's right there. So it's really small. Same kind of setup right here. If you pop above it, your first exit's here, second exit's there, then go to your premium arrays. Pull your fib tool and go 50, 62, whatever. It didn't break it, so we're still bearish. Hopefully you guys can see that this, we're doing a 1 minute candle here, and that has not shaken us off. We're still on the horse. This choppiness has not thrown us off. We are still on the horse. We're still the flea on the dog's back, and it's on a run. We're there. It's trying to shake us off, trying to scratch us. We got our little head all dug in there. We're getting a good, we're slurping away. We're feeding on that thing. It is not kicking us off. This is how you stay on the horse, my friends, until it punts you off. And yes, those big whipsaws will take you out. Wait for your news event to finish up, because those whipsaws will take you clean out. Sometimes they will gap above you, and your stop loss, your fail safe didn't work, and your stop loss didn't work, and they gap above and clean you right out. Then that's your decision when you entered the market. That's not a problem with my setup. It's not a problem with this method. It's about when did you enter the market, right before a news event? Well, you're just asking to get your ass handed to you there. See how we're just consolidating now? We have not broke through that thing yet with a good, decent body candle. So our cam model people are just going, oh, look at what's happening. They're getting all excited like a puppy, getting ready to go for a run. It's shaking its tail at the door. Oh, where's the carrot? Somebody called for the carrot ages ago. Where are we putting our carrot? Let's give the carrot an opportunity to be down here. I'm going to be a little neutral right now, because I don't know what's going to happen here, but I really want to be bearish overall for today. So again, if you get in here and you see this body break above, you're inside this range. Pull your fib tool, look for your 50%, and as soon as that clears your first objective, move yourself into a break even, because you're in a tight little area that could wipe you out. And if you do, it comes back and takes you out, who cares? Pay yourself, even if it's a couple of bucks. The macro begins right now. or in the next minute or so. See the body traded above it right there? Body, did you catch it right away? And you're on this run up? Now I'm bullish. Right there. I'm bullish right there. If you put a trade in there, you're in. Pay yourself. Move to break even and wait. Did you find it? Were you quick to catch it? Wait. You're in money now. And you're at break even. Oh, look, you're going to make some more. You took some more right there. Here's that fair value gap we talked about earlier. We just hit the edge of it right there. Look for the range. Pull your fib tool. We talked about this before it happened. So if your setup was right there, the moment that went through it, you go, ooh, it's closed above. Great. And then it gapped right down. See how it closed there and opened back down here? Now you're out, but you paid yourself here and you paid yourself there. 50%. Move to break even. Use that method if you want. You, even in these little crazy little retracements, you still made a little bit of profit. Now you're saying, Darren, if I put my stop loss down here, do you think I care about making money off of that little bit? That's nuts. I run the risk of getting that all taken out. You're right, you do. So do you want to be in that trade? You may go, nah, I don't want that. Cam people are going, I'm going long on this. Till proven otherwise, my stop loss is sitting down here. If I lose 50% of this or this inversion right here on a body close, right there, now you're out. Because it's about to take your low out now, because now we're bearish. See how we closed below that point right there? You made some money here. It came back against you. Now you wait for here. It trades into here. You get short right there. Or you may say, no, I want the ultimate entry, which is right here, to go short. So I'll do this one with you. See how you just keep alternating from one side to the other side? This is my ideal entry to go long, and if it comes back against me, my fail safe is going to save me. So you made a bit of profit there and there. It came back against you. You broke even. Now it ran through the bottom half of this. You wait for it to get back to that side, because if it crosses over and comes back to it, you break even again. Or you may just say, here's my first entry, second entry, and your first entry's just paid you a piece here and a piece here. You decide where you want to put your trade. If you're 1%, and if you're on a 1 minute chart, you better make these decisions fast. That's why 1 minute charts you got to be super nimble. If this was a daily chart right now, and you did not pay yourself at those things and move to break even, the very next day it ripped against you and you went, this stuff sucks. Go back and analyze it. You screwed it up. Nothing wrong with the theory, nothing wrong with the application. It's your delivery that you messed up on. Your stop loss, you got too greedy and you're aiming for way up here and not for the most immediate PD array. Hopefully that makes sense. I don't want to come across as being a dick, but you know, don't blame the system. Look at the delivery model that you used. You may have looked for, oh, I missed this. I missed that damn fair value gap he talked about. Oh, I missed that high he was talking about. I didn't pay myself at the 50. I didn't pull my fib tool. Whatever. See, it hit it again. So now you've swung below these lows. Look at this. If we break this to the upside, I'm bullish again. We're in a consolidation. So is my opinion going to change? I reserve the right to change my mind in a consolidation. Cam model people, you may say, no, that's not a consolidation, Darren. From there to there's my consolidation. I have not broke above it with a body, so I would not have entered into that. Where you draw your consolidation is your perfection of your setup, not from something I gave you. What you decide is your setup. And that's a level of finesse you'll get once you understand your setup. It's a level of finesse you'll have that is exclusive to you and your risk tolerance. So I'm going to go short right there if it comes back to me. And my stop loss, we're going to do the same thing we did before. So up here, I don't know why I'm risking 6. I don't really need 6. And I'm in a consolidation, so I really shouldn't even be trading this, but I'm just going to try and show you the principle. And then I'm aiming for my first order block. I'm inside this range. So if I get up here, I'm in a premium discount, that order block at that order block. So the moment I come back into either here or here or here, you decide, I'm going to start collecting some profits. And I'm going to move to break even real quick, because that's this in reverse. Right. As soon as I get to 50%, pay myself a little bit of coinage there, move myself to break even. Then 62, blah, blah, blah. You can pull your fib tool and just work it all the way back down. Leave a little piece on there. I've got 6, so I'll take 1 off there, 1 off there, 1 off there, 1 off down here, and then leave 1 on to continue running. If it comes back and takes me in. If it takes out my low before that happens, I'll move to the sidelines and wait. Because that's one of my objectives I'm aiming for. I want to know if do we get a new swing point for another potential run up to here, and I need to be up, not selling this. I need to be buying it down here to run back up here. So then I ditch this idea, if that makes any sense to you guys. Whew. Terry Sullivan! Hello, mate. How's it going then? TGI fair prices already hit 30%. Terry Sullivan, how late with family business? That's all right, my mate. That's all right. How's Terry doing? How's your lovely wife doing? Hope she's doing well. Hope you're getting lots of cuddles, lots of kisses in. Give her a kiss on the nose from me. Say Darren says hello. Give her a little kiss on the nose. Says, I don't know. He told me to do it, so. Okay, here we go. Come on. Look at this. Tip, tip, tip. Trying to get up there. Now, if it goes ripping right through me real fast, that's what my stop loss is for. Let's say that was 1% of my account. It rips through and takes me out. I lost 1%. If my fail-safe works, then my 1% won't get taken. And if this works, it's a perfect entry. I want to see it. Just tap that. Like that. But actually put me in. There you go. Now I don't want to see the mean threshold give way, so I don't want to see this close above here. So here's your fail-safe is going to come in to protect this now. Start paying yourself at 50%. I think my first 50% is there, so I should take off a piece here. Oops, crap. This is going to be quicker. Pay yourself quicker. Close position at, oh no, I just wanted to do a partial. How do you do partials on this, you guys? Don't you usually just click that and it says partial? What did I do wrong there? Oh, well, we made some money on it, 400 bucks. So you're trying to do partials on the way. Sorry, I was trying to do partials on the way down there to pay myself because we're getting back into this little range here. I'm just inside a consolidation, so I want to pay myself. And that's 400 bucks. Again, that was 1% of the account. If it was a $100,000 account, 1%, you just made $400. That's something you can take your wife out for dinner, or just say, look, that one's for the little homeless guy I love down the street. I just see him down there. I'm going to give him some money today. I'm trading for him or her. And walk up here. You did great in the charts today. Here you go. Help some of your friends out. Pay this forward. Let me get you something to eat. Go to the food bank. Buy some food for some people. and pay it, give it to the food bank. You'll feel great about that little, that will double on how exciting that little $400 is you just took in 1 minute. That makes that so much more exciting when you see 1 minute of work turn into fruition and you can give it away like that. Money flows to you and through you, my friends. To you and through you. Inside the range, sit on the sidelines now and wait. Wait for a setup. And if you're still short on that, good for you. Move to break even if you can. Well, actually, if you move to break even, you would be out already. You need to modify the order. You know what I think it is? I think if I go in here, I've got it set for instant orders. You got to take this off. I think that's what it is. I give myself specific messages at specific times. Time and price is crucial. That's where the instant order. I like instant order, but it doesn't give you the options to. Can I just Can I hit modify it while the instant order retracement is on? See, right now it's come back into this. Either way, your stop loss would have been, you would have been breaking even by now. If you've taken a portion out, you should always move. The moment you pay yourself, move to break even. Same kind of setup. Multiple times, you can keep coming back for one more entry, one more, and play that all over again, over again. And if it comes back into here one more time, pay yourself. Move your stop loss to break even. If it comes back again, start your trade all over again. You just did. Start all over again. Comes back in the order block, pay yourself again. A couple of $100, move to side. You've got like $1,000 playing around inside here. Just jump in between these candles. How many of you like to make $1,000 in 5 minutes? Watching the arrays from one to the other, that's the range you're trading in. From that candle to that candle, inside this range, you literally pop down, looking for this opportunity to keep loading in. Stop loss goes up there. Again, you may say, that distance between there and there is way more. I'm risking way more to get a couple of $100. Again, it's a bit unrealistic to expect anybody to trade this. But I'm just showing you from an algorithmic perspective, it is running between arrays. That's what it's doing, bouncing around. And now it's got to make a decision. I got to bust out of here. I got to bust through this premium or this mean threshold, and I got to bust through this mean threshold. See how the candle's closed above it now? I'm bullish. Run the highs. That right there. Does that not excite you? Does that not like you go, oh, yeah, you just saw the market change direction right here. Pop. It just said, guess where I'm going? And the moment it popped up above that, you'd be out if your stop loss was up there. Otherwise, it just ripped up and took you out. That's why I like to take that stop loss and drag it right down. As soon as it gets above that and it opens, you go, ooh, whammo, slam the stop loss right down to that. I don't want to see it pop through here now. It goes from there to there the moment I see that close. So if it pops up and takes you out, that's good. There's the difference between the two. Another from here, that's 15 to there. That's 2 handles versus 15 to 22. 7 handles. 2 versus 7 loss. And it would have taken you out. Fail safe. That's the example of fail safe. You need to modify the order. Yes, yes, and amen on helping others. You can do partials, but you need to adjust your contract size next to the red blue buttons. Yeah, in between here, you get to adjust the contract size. I'm just going to drop that back down to 2, just so I can do 1 entrance, 1 exit, so you guys can see it. So you're bullish. We unfortunately didn't get an opportunity to get back in. See, there's the reversal, bullish pattern. We break above it. If we get back into it, you go long. You don't get an opportunity to get in it, so we're not long. So you wait. Who cares? Who cares? We just wait. Wait for our next setup. 72 bodies in the house. 72 people. There's a lot of people sitting on the sidelines not saying anything. Pop in, say hi. You don't have to live in anonymity on the sidelines. Just say hi. We run that high out now. What are we waiting for on the other side, folks? Get excited about this. Say, oh man, don't get upset. If your mindset is saying, I missed this, even when he called it, I missed it. You didn't miss it. I didn't miss it. We caught it. We knew it was we knew it was bullish the moment that candle was starting to take off, because this guy here broke that guy there. So watch out now. You get excited about this. Say, oh, this is deliciousness on the way back down. We've got this low candle down here. We've got a breaker sitting right here. We could bounce off a breaker and go higher. Ooh, there's so many different entries we can get here. And do you trust them? Where do you want to be in that range? Does this low part of the breaker bring us into a better discount inside a smaller swing point? Do Derek's entry, Derek's discounts, and Gift Emporium. Let's go for Derek's discounts down to the lower portion so you can pay yourself on the way up. If you buy a premium, you better hope it goes to a really big premium. So if you're buying right off of here, and that happens to coincide with an old breaker, I'm more supportive of that. That becomes a breakaway gap. But if it's way back in here, look where that sits. You have your mean threshold here. We have a little inversion sitting right there. Comes all the way down to its inversion here, lines up with the top of the high right there. So if it does come back down into a discount portion, pull your fib tool. Start trying to practice your reverse engineering now. Where does this line up to give you support if that's the high? And I would say this would be more the high, right about here. I want to see that as the high. And if that's the high, 62% brings us right back into this breaker. Let's see if that's a hit point. Nope, it's not. Body respects it. So now if that doesn't work, then I go here. I reverse engineer it up to there. I'm just playing right now because I'm not making an entry. I'm just practicing something. And I've given you guys a lot to play with. So this reverse engineering thing is just something I like to play with. It doesn't necessarily mean squat. Oh, here we are. Here we are. Reversal. From 10, the range. Oh, we're inside the range. 62% reversal from the macro that started at 1050 back into the 11 o'clock, into the range that was created between 9 and 10. Look for 62% retracement. So is that this here right now? 62% right there. 62%. Y'all see that? You saw me talking about this yesterday. The 11 o'clock's the retracement back into the range created between the open of 9 o'clock or 9:30 and the 10 o'clock to 11 o'clock run. So whatever that run is, look for a 62% retracement, which is all the way back in here. The macro started back down here to go long. We couldn't get in on it there. But boy, did we catch some quick little bucks in here, just in one candle. Then all of a sudden it went tip. I'm heading back up. 11 o'clock, run back into there. Now I'd like to see this run all the way back down and clean this out in for lunch. Unless we come all the way back up into this here and clean that out. Take that high out, come back in for lunch. I wouldn't want to see it get all the way up there. This is where I want to see it hold now. If we get one more little pump up into this area here, that clears out some highs, creates, so here you're trying to anticipate what might happen here. This would be another pump up into here, into that fair value gap, create that swing pattern that we're looking for, like that was here, to get low. We could come back all the way back up, revisit this one more time and come back low. So then you're between here and here. You trade that distance between there and there. So we'll just wait and see what happens here. A couple of ideas. We'll move the carrot to the sidelines because we're inside the middle of the range. So I like this up here. I'd like to see that hold. If we lose this mean threshold on the upside, look for here. And we haven't got anything that tells us to go long right now. We had it right here. We just couldn't get in on it to go long. So we've already cleaned out a bunch of liquidity that we would be aiming for. Had this candle had a wick on it and wick back into here, we could have been in long right there for a run for these liquidity points and the premium inside that bigger range. So this is the smaller range you're aiming for. Take the liquidity there. It extends up to the next high. Your liquidity is the order block, mean threshold, rejection block. Take that. Next one is this guy. Order block, mean threshold, rejection block. Next one. There's nothing in that one because it's just a wick. So you aim for the wick. Then you aim for the fair value gap and that little fair value gap there. You want to see it run all the way up into there. And here we go. Are you guys enjoying this? If you're enjoying this, smash the like button. If you like what we're doing here, you're more than welcome to become a subscriber. Pop into the Telegram and catch us on the after hours. If there's a specific question you want to ask me about anything we've talked about this morning, you can ask me in there. After hours, I will pop in there and answer questions where I can, or direct you to a place where you can get that, hopefully. But what I do ask is that if you do come in there, you be kind and generous. If you've got nothing nice to say nothing. Otherwise, you're gone. Plain simple. Be nice to people. It's a simple concept. Say nice things. Support people. Treat them as you'd want to be treated. If you're nasty, not the place for you. Not the community for you. No one's going to validate you. No one's going to give you praise and glory in there. Nobody. If you're there to peacock, no one's interested. If you're there to share your experiences and help people out, you're welcome. And sometimes that's the New York Open midnight candle right there. Nice reaction off of it. We've moved into this fair value gap as we expected. Now I want to see this big snap through this. Come back in and find some support at it, and then we can start coming back lower. So I'm looking for that reversal pattern to happen. This thing here, I'm expecting that to happen over here. And we'll do the same thing, rinse and repeat. And you've had multiple opportunities. I've showed you here how to get in and get out and make money real quick inside these ranges. Now, whether or not you have and in order to do that, you need to be able to watch the chart very clearly and see that happening. If you don't have that level of understanding, if it looks simple, it's not. You really have to be on the ball watching every candle and watch for these moments to enter and get out right away, because they're logical levels that the algorithms are reaching for, that I see anyway. And once you catch them, you'll see. And if you go wrong, something happens, don't be upset. Screen capture it, pop on the Telegram, say, Darren, what went wrong here? What did I miss? How can I improve this? Or anybody. There's lots of people in there. Man, we got some smart people in there. We got some really smart people. And I love the fact that there's such a great community there to help each other out. They will direct you in any way they can. And there's people that are still learning stuff that are willing to help people out. I love it. And we have all levels of understanding. See how we haven't got a body trade above this yet? I want to see this rip off of here now. Now you can come back and do the same kind of entry you had here. You still haven't taken that low out yet. You can start this whole process over for a third time. Stop loss goes here. If the body trades above, you get out and you're back into the same trade again. But if you look at all this and go, I've missed out on an opportunity. No, you haven't missed out on nothing. It's come all the way back to give you another opportunity to start your trade over again. Now you may say, yeah, but I've already taken out my objectives. That's fine. That's fine. Wait for your next setup then, which is right here, if it happens. And you can find the Telegram link on the bio description above. Click in there, come in with some love in your heart and care and consideration for other people. See this breaker? Traded above it right here. Come back. Does this breaker provide a level of support? I want to see it blow right through that breaker. There's your first indication that price is going to start to come back down. If we blow through this like it means nothing, we start to get through here. Now for the fail-safe to work perfectly, you need it here. You need your entry right there if this trades below here on a close. Because if it trades above, comes back to it, you get out at a break even, stop loss doesn't get hit. If you go in here, so watch 9 seconds, 7, 6, 5, 4, 3, 2, 1. Good, so let's put an entry in there, sell. Let's put an entry in here, sell. Stop losses will go up here. There's a reversal. We blew through the breaker. There's one. Watch that fair value gap there. Pay yourself here. So what you could do is you go, okay, so you gotta pay yourself there. So how am I going to do this? Can I go here? Modify position. There we go. Stop loss. No, I just want to take profit. And how do you work this? Take profit. Oh no, that's not how I want to modify it. I want a partial. How do you close out a partial of it? Don't let it close a partial. Let's close it out and see what happens. If I can get back into that again, we'll start this whole thing over one more time. So we're going to keep rinsing and repeating here. We'll do the same trade over again. Now that we've got below here, pay yourself a little bit of money. If it comes back to me, great. It gives me a chance to get in one more time. If it doesn't, it rips off on me. I'll go, okay, I got to learn how to do that partial take profit thing. Equal lows sitting right here. The carrot's going to come. We'll get the carrot in play here now. You can do partials, but you need to adjust your contract size. Did it once again. Entry was 5 out of 17 and only had held for 5 handles. Don't know how to fix it. What is it that you're stuck with, Invest? Is how to hold on longer? Is it the fear that's stopping you and you take out right away? Because that's just psychology, man. That is not anything to do with a trade setup. It's just your head. You haven't learned how to trust your setups yet, and you don't have a fail-safe model that you can count on if it goes wrong. and you've got a lot of fear. I totally get that. I totally get where you're at. So I'm not sure exactly why you only took 5 handles. Celebrate the 5 handles right now. Don't get mad at yourself, because all I hear right there, just from your little emoji there, is that you're pissed off at yourself for making money, only 5 handles, and you're treating how the markets are acting now, and you're judging your decision on what you took earlier based on the future that hasn't happened yet. So now you're judging yourself in the past, and that is etching inside your brain as failure, that you're going to screw it up in the future, that you're going to miss something in the future, that you're going to botch this. That is not the kind of thing you want to set inside your head, my friend. It is not the kind of stuff you want to set inside your head. So it's giving me another entry to get in here. I'll pay myself here, or again, if it closes above me here, because I'm in the lower half of it, if it trades above me here, I will get out before it gets to me. So if it comes here, I'll collect again. I'll just keep doing this collecting thing right at that level. As soon as it gets to the rejection block, let's just do this. Go right here. Buy 2. That should close me out the moment it hits that. I think that's right. So that's a return back to the order block. You could take a piece off right there. I'm going for the rejection block. Oh, I guess I could do this, hey? I could turn that into 1. That would take a partial out 1. And then I'd have 1 left on there for the next one. Yeah, let's do that. Let me just close that for a second. Let's go here and do a 1. This is the only way I can think about how to do this right now. Oops, no, I don't want to do 3. I want to go back to it. Okay, and I want to go 1, and I want to go 1. That'll close them up. Just aiming for the next objectives. Now watch here. Before my stop loss gets taken, if I'm wrong, there's your the 3rd entry. Now you watch real carefully. Order block, it can come up in here, mean threshold, do all that stuff up here. Well, I have to rely on the fact that this 40 seconds. So you may say, it hasn't traded above it yet. I don't like these wicks. I'm out. Well, don't forget you got an order block here. You're in a premium array, so it could just come back into this order block, mean threshold. It could do all that stuff. If we start getting up into the rejection block, I'll close it out before it gets. If it starts to dig into the rejection block, I'll close it out before it hits my high. $11 seconds. There's the rejection. 6, 5, 4, 3, 2, 1. I've closed above. Now, if it comes back to me, I get out. I take my stop loss right here and I slam it right up against there. So now I guaranteed I'm not going to take my full 1% loss. So now if it comes back up through me again, the high of my candle, I'm out. I'm out there. So now I've closed above. Now I'm expecting it to go higher. Close those out. That's how you save yourself a full run on your stop loss with the fail-safe. So I took a loss from that one there, but I took some profits there, loss there, probably evened out in the end. And you wait for another setup, because now we've broken above that high. We're getting into this consolidation thing. So now you go, I've broken, see, I missed it. I missed it. This high here, you see this one here? See the swing below the low? We now have this guy break above it, come back to it, find support at it, push higher. We're not, as soon as we break through this guy here, I have overlapping ones to go short and ones to go high. They're literally they're not doing this one's down here, one's up there. They are literally overlapping each other. So you go, I'm in a thing, I'm going to get my ass handed to me if I'm not careful. So this could go down, this could go up. That ran through and said, it's not going down. This one here, you never got a chance to get on it to go up. See? I didn't see this. I was too busy focusing on this and didn't see that. So you can get caught out. But at least the fail-safe saved us from taking the high. You're going to see run up here now. Invest. Did you get stopped or shorted there? Looking like a good model. 62% retracement of the range from 10 to 11 a.m. Terry Sullivan. Yes, yes, indeed. On the 1 minute. Dave Barry. Need to go blow snow. We got dumped on today. So did we, but we didn't. It wasn't a dump though. It was just a small one. I could kind of shovel it with one hand, which is really great because my back doesn't handle big, heavy snow. Not anymore. So it was really light this morning. We've had 3 days of snow like they promised. Furba, how are you doing? Really, Friday is not good day. I have running trade on GBP and it's not going well. Ooh, do you have a stop loss? Do you have a fail safe? If you're fail safe, if you're running way above where you're underwater, and if you can't find your fail safe as your stop loss has been run out, or it's going to get run out because your fail safe has already been run out, you're about to get your stop loss taken. That's the discipline, Furba. You got to have discipline to say, where's my rule? When I'm in a trade, if it's wrong, I want to get out of it real quick because I know if we break this, we're going to the upside. And see how the stop loss would have been taken? My fail-safe saved me because I saw that price is breaking. Here, I caught that second, but here it broke my initial. I'm out. And it popped up. It even came back all the way back into here. That's why you like to get the Derek approach. If you want to save yourself the opportunity to get out at a break even, you always take your trade up where you think it could fail. You may not get it. You may just get the bottom one to make your profits, and then you may not get it and just trade out. But if you do, you're the one's going to make the most profits on a long trade. Everybody else just sniping, quickly grab. So from here, that's why you saw me take the first one, take the profits out here. If it comes back into me again, I'll take the profits again. If it comes back in again, these are quick snipe trades that you can take something out here. Here's the higher commitment for the short. And if it fails, you can get out relatively quickly at a break even. But here, you're snipe a couple of times. Just keep using that, loading that one back on again. That may be a trading style for you to say, oh, here's an opportunity for me to grab a whole bunch of little runs into this rejection block. Bang, 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 bang. Comes back. All three of them are loaded on. Now I get to go long. If I'm wrong, the distance between here and here, which you've made up in multiple trades coming into here, that loss that you're going to take to break even and this one to break even are very small, and you've already made your profits here. So it's almost like you're building a buffer. You're saying, I'm going to take a bunch of trades here because I'm going to invest up here, all the way up, all three of them, and I'm building their buffers. If they fail, all ripping into here. Every time it comes down, I'm using that first one for that to build my buffer. It's like building your nest, and if you're wrong, you can ditch your nest at a break even because you made money here and you lost money from that one to there. Does that make sense? I'm just formulating a whole new different plan here. This would be a great way to trade this if you had the wherewithal and the discipline to get yourself out at the rejection block below you. I like that idea, actually. I just came up with that one. I think that'd be a great idea. It's yours for free for the low, low price of thanks for tuning in, and smash the like button if you like what we're doing. Oh, yes, yes. You see it right here? Watch this now. We want to see this candle close below here. We got a body close below it. You want to see this one come up into the mean threshold of that candle and start snapping back. We're at the bottom of the hour. $30.32 can make a high. Look for a rejection block again, and then look for one of those setups, because if we break this high up here, look for a setup for a short. And you can see how this one is such a delicious little long right now, but we never got an opportunity to get in on it. You see that? And if you were long, you would be getting out right there. The moment that broke there gives you an indication of going short. You pay yourself a couple of times, you break even, and well, we've already talked about that, but that would be your short or your long. It's blocked out right there. And then the moment it trades back above it, comes back to it, you can go long again. So all you lost was a little piece in here. You made some money coming back this way, then you got back in again long. You're staying on the horse. Literally, it cannot throw you off. Here, this one's off. Here, this one's off. And then you're back on again, and you already snapped this one out here a couple of times. So if you're really quick, you can just keep collecting, pop out, jump back in, collect, collect, collect on the way up. So for this one here that we had break to the upside, oh no, you still don't get a chance to get in, so sorry. Here you can't even get in again either. Yeah, there's nothing to get in on that as well. So this trade, had you been able to get in there, you got out there and you sit on the sidelines and you wait with some dollar bills in your pocket. Russell Invest, did you get stopped out looking like a model? Need to go blow some snow really. Friday's not a good day. Think we may take out the 10 a.m. high and go into the order block before going lower. End of the day. Possible. I agree, Derek. If we take out that high, I just don't want to see us get back above 50% of this wick. 25% is perfect. That shows signs of weakness. So I'd like to see that close today and just continue coming back through. I did not want to see it just a return to this fair value gap and go higher. I wanted to see this pull through here. I'd love to see us revisit these lows now that we've taken out that high. I don't want to marry the idea, so it's just some ideas I've got here. That high, wherever that high is on your chart, 606, I don't want to see that give way, because then you got 50%. If we close above 50%, then we're running for new highs again. Russell, I was long. Just put a limit in. Hit top left button. Top left button. Put a number of contracts to trim and hit opposite button. If you sell, press buy. If you're long, hit sell. Yeah, got that. It's a mental thing. Wish I could chat with you about this. Invest, you can, man. If you need to chat with me, come on to Telegram, and we can do an actual voice-to-voice chat on there. It's all free. It's encrypted end to end, so you don't have to worry about that. Rox, welcome to the channel. Everybody say hi out to Rox. He just joined our Telegram group, so welcome, Rox. I hope that's short for Roxanne. We like to get more ladies in the thing. I'd like to see more women doing more trading. That'd be great. Encourage the ladies to get out there and start chewing up the markets. So yeah, Invest, you can chat with me on there. We can do a voice to voice, or we can do direct messaging there, and I can help you out with some of the psychology you may be dealing with there, or some of the mental things you're going through. Or if you just want to come on there and tell me your life story and tell me why you're in the charts, why you're doing the things, and what we can do to help move you in a direction that helps you accomplish your goals. Get your dreams taken care of. That's what I'm into. Was on with a partner before FOMC. Had to get off charts to handle something. Called that massive rip before it happened. The 4-hour chart was so clean. Don't get upset with yourself. Don't worry. Those things happen all the time, man. We'll catch another one. It's Friday. You have the whole weekend to just enjoy yourself. You go into the weekend with 5 handles in your pocket. Don't look at what you could have had, just what you got. Gratitude, man, for whatever comes your way. It's living with gratitude in your heart. Whatever comes your way. Even if it's taking a loss. If it gives you a lesson that you can take and go, I can learn from that. That was worth the loss. Have it in your heart, man. Have it in your mind. Your neurology will focus on good things. Even when you're taking a loss, what can I learn from that? What value did that pay me? That I paid for in dollars? What lesson did I get out of that was worth $5, 5 handles, whatever? Invest 4 hours. Look, it was that's in clean dump before the end. I went long 18, 20 points. 1 contract done for the day. See, Kitty? She's smart. She just gets what she needs, moves to the sidelines. I'm done for the day. There's discipline for you. There's some cool discipline. Good for you, Kitty. What's Christian doing? Is he still in? Is Christian still in there? Kitty's off, just enjoying her day, sitting on the deck. Now you can sit there, enjoy some sunshine, made some money, making a smart move. And Christian's in there just, I'm gonna kill this thing. Charge through. 2 smart traders right there, let me tell you. S. Wells, Darren, have a great weekend. Wales, take care, buddy. Have an awesome weekend. Wish you all the best. Look at this. See that little swing point there? Did the rejection block hit us? Did you get your high you're hoping for? Nope, you did get rejection though. I like this, and I like this. Is that giving you some intent right now? Now I'm bearish. Not just because we've hit a high. I'm bearish because it's given us signals to run lower. It's already cleaned out a swing point, so it's a break in structure. I'd like to see a body break a market structure, so you can consider this break in structure if you want. So watch for a return into here. Or a return all the way up to here. Pick your poison. Which one do you want? Premium, discount, stop loss. Watch for your inversion to break. Get out before. There's your entrance. Look at those, all those beautiful entrances. And see how it snaps off of there? You want to see that continue to just drive down now. That would be a nice, clean, 100% snappy entry. Get out of there. And a breaker inside a fair value gap? What the hell, man? Those are like load up the bus. We can even go short on that. I'll even take a short right there. Oh, well, too late. That would be it. That's an awesome little breaker inside a fair value gap. Load up the bus. Collect something here. Collect something here. Wait, there's some. Take some. Take some. Now you're aiming for this down to here overall. Pay yourself along the way. Move your stop loss. Pull your fib tool. Whatever method you want to use. They're perfect entries. I just gave you another couple. Invest. Okay. Johnson Creek. I will text you. Johnson Creek. Yes, indeed, sir. Johnson Geek. It's because we have a place called Johnston Canyon here in Canada. Sorry. Johnson Geek. Sammy, somehow I am not getting your telegram. I'm not getting your Telegram. Go up to the top there. You'll see it at the top. I don't know if you're... Are you clicking in here? Click in here. Click that. And you should get into our channel. One thing you've taught is to have a better discipline with picking my trades. Yes. Yes, my friend. Yes, indeed. Look at this one. You can't ask for more precision than this, my friends. I gave you this before it happened and right at the point where it happened. Breaker, and so, oh my goodness, this is like load up the bus time. Did you take it? Do you trust your setups? That stop loss you had sitting up there at 1%, slam, I'd be like right in here, paid for my trade. And I'd be like, pay yourself. Pay yourself all the way to the bank. Merrily, 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 merrily. You guys finished the song off there. I don't know. I'm just working on it. Order block, range. Are you paying yourself at an extreme discount now? There's that one there. There was this reversal here. Did you pay yourself? If this reverses back and comes back into you now, you're going to be like, damn, I was going for here. I was going for here. There's the next one down below you. You're inside this range. Are you paying yourself at an extreme discount, at an order block, at a breaker right here? Are you paying yourself at that? Right there with precision. Are you paying yourself? Your exits. If it's your entrances are awesome now, work on your exits and work on paying yourself. Because if this comes all the way back here and takes you out and you did not pay yourself on the way down because you aimed for here, you make my point for me again. Pay yourself inside the range you're in. Pull your fib tool. If you pulled your fib tool from the moment you entered, there's just, again, this is just another way of managing it. You don't have to do this, but if you entered in there, pull your fib tool. You take 50% off there, move yourself to break even. As soon as you get to 60, move yourself to 50. As soon as you get to 70, move yourself to 60. It goes to 75, move to 70. It goes to 78, move to 70, 75. It came back and it tagged you out there, and now it's going all the way back up again. That's the only piece you missed right there. And you paid yourself all the way down, and then you get to come back here and start the whole thing over again. Like all of this was just money somebody came running up, stuffed in your pocket and said, do that again, I dare you. And if it takes off, who cares? If it rips through here, who cares? You just ended a Friday with some money in your bank, in your pocket, and you just get to move to the sidelines and say, now, how do I refine this and stay in this longer? If I don't want to do that quick snap, 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 take myself some money, then don't. Find a new way to manage it. I'm just trying to give you an idea on how to trade a range, a small little range that you're in. If it comes back now into 50% of this order block holds price, is that your entrance to go short again? Because we haven't taken out these lows. If you want to discount or you want to get back in this range, get back up here to go short so that if that fails, you can get your fail safe right here. Wait for it to come all the way back into your order. And if it doesn't come back there, it doesn't come back there. Who cares? If it does and then peels off, you're going to be like, that was genius. And all it was just trading inside a range, saying, I want to sell it at a high price and buy it back at a low price. That's your shorting opportunity. There's no reason why you should get your stop loss taken now when you had multiple opportunities to make money using this method inside the range or using the fib tool method to pay yourself. That's just two ways. Again, how you trade is your thing. I'm just kind of giving you some ideas. Somehow I'm not getting it. Sammy, did you get that entrance into Telegram now? And that's one thing you've taught me is better be patient. Okay, no, I missed my entry, so I'm sitting on the sidelines. Christian, patience, my friend. That's when you say to the wife, look, you made all the money this week. It's time for you, kitty, to take me out for dinner. Remember the flowers I bought you a couple of weeks ago? Remember when I told you it's my turn? I want flowers and take me out for dinner. That's a loving relationship, kitty. It's give and take. Christian likes flowers as well. He's like, hell no, buy me a power tool. I don't want flowers, give me a power tool. I sent a message on Telegram. Excellent. I'll get to that after the show, and we'll work on some things for you if you need. I'm using SMC 1 minute chart. SMC on a 1 minute chart? What's SMC? Sorry, but my winning rate is not great. Smart money concepts, that's what it is on. Okay. Hope I didn't miss any knowledge. Don't worry about what you've missed. We'll find it. We'll get it back to you, my friend. None of this should be any reason for you guys to panic. If trades are going in and money's being made here in front of you, don't sweat it. It's all within your grasp. Believe me, if I can do it, you can do it. 100%. If I can do it, you can do it. I grew up believing all I was ever going to do is sports and banging a hammer or doing something, not using my brain. I grew up believing that I didn't have it in me to use my brain. I was born dead. How's that? I was asphyxiated at birth. They had to get me back with CPR. So life's a bonus for me, man. I started off in the world in the wrong place, and I came back, and here I am now. Who would have thought 58 years later you'd be chatting to a dead guy. And what to do? I went back into a career that was all about saving people's lives. Isn't that interesting, hey? Born that way. And that's what I was committed to. Interesting. Now I think about that, I think, yeah, I was. I still have the little card that said, oh, he's asphyxiated. It was a home birth in England back in the day. That's what they did. Not everybody ran to the hospital. We went back there once, and my mom says, you see that building right there? So, yep, you were born about 20 feet above that roof, because there used to be another building there, and we used to live in a little spot above there, and you were born about 20 feet above that roof in the air there. That's about where you were born. It's like, oh, wow. And that's where I had the old cord around the neck, meconium stating, not breathing. They had to do, back in the day, CPR was not a hugely accepted thing like it is today. Like it's back in the 60s, it was still good. But that midwife or the nurse or wherever she was, she saved my life. And it's interesting how that one little technique, she learned how to do something, and it became successful enough to be able to bring me here to you folks today. Through all that time, we've all been able to meet up here at this time in this place for this purpose. Isn't that interesting? Isn't that interesting? And then you say to yourself, do you get worried? Do you get worked up over a stupid thing like missing a candle here, missing a candle there? This is where we're supposed to be, folks. This is why we're here. We're meant to meet up. You're meant to come here. We're meant to share this stuff. And this is just my way of saying, hey, look, I just want to help out. I want to continue to help. I'm no longer a paramedic firefighter because of the injury I sustained and the stuff that still goes on inside my head. So this is my way of contributing. This is my way of getting out there and doing the EMS thing, trying to save lives. And if it just means by doing it through candles, sitting with you guys every day, trying to find ways to help you accomplish your dreams, man, once again, I've been born again. I'm reliving my life in a different way. Some old career dies and I'm reborn. I come back to life and I'm going to find something else to do. That's what the story of life is. Recreate your destiny. It can happen from birth when you have no control over it and your life is literally in the hands of somebody else, to here, making a decision. Are you going to beat yourself up over a candle? You missed it? Are you going to be upset that you didn't set yourself up for success in that because you rushed in, you got greed, you got all this other stuff, the world is coming down on you and you're being influenced by other people, find your groove right here. Find your peace. We're here to help, man. There's a lot of awesome people in here. Awesome people in here to help you out. And all I want to do is see you succeed. Like I really gravitated towards Michael's teachings when he was talking about, look, I just want to see you. Tell me your story. Tell me how you made it. I just want to know how you use this stuff. And if I can be here while you're making it, huh. He can't do that because he's got 1 million people that's following him right now. We've got our 500 people. We've got our 535 people here. We got people in here every day doing this stuff. I get to watch your journey. I get to see people like David that are working their asses off to study the charts. They're asking questions. These people are committed to finding their way. Not like the rest of you aren't, because I know you are, but most of you are just doing it quietly and doing it on your own. But know that you don't have to struggle. It's all there for you. Back up into that breaker again. Now watch, if it trades through this on a close, then I'm bullish again. At least for the short term. Anyway, that's a little bit about my story. If it inspires you, great. Breaker inside a fair value gap. Are those not like awesome things to see? Right off the New York opening candle too. Look at that. That line you see there is the New York opening candle, midnight candle. Is that sensitive or what? Now, in order for this to keep pushing through now, you want to see this candle give way. Really start to push through here now, and you want to see this candle here break through, pop underneath it, and continuation on the downside. So you're still bearish until we get a run above this to go bullish. Now that swing point, my stop loss, I'd have it right up against this now. I wouldn't want to see it take that out. So I'd move from here to here if you're entering in off of this. And you see how this fair value gap that we were talking about before, you break down, come into. See how we have not traded above it yet? So now I would move my stop loss automatically to here. If it takes me out, you don't want the body breaking above this. I wouldn't want to see it revisit that high. The principle's still the same. If you get a body above and you want to close it out that way, you can do that too. Keep your eyes on that piece right there. So watch 1 second. See how it just closed above it now? If you're in there, you're out there. Wait, because you might say, well, I don't know, Darren, that's pretty damn close, man. See how it just closed the body above it? Wait and see. If this takes out that high, you'll see why. How you manage this piece right here is so important. You have to decide what you're going to do in there. My rule is I'm out. I want something clean, and if it gives it to me, if this rips down here now, I don't care. I don't care. I'll wait for another setup. And you go, yes, good for you. You're still out. You still followed your rule. Pat yourself on the back for following the rule, even if it doesn't pay out, because I'm not beating myself up on the future. I'm celebrating my success, and I was out there. This has nothing to do with that decision I just made right there. I'm happy because that's my rule. I followed my rule. Happy, move to the sidelines. And if it rips through and takes me out, I can go, I love my rule. And if it comes back here, I go, I still love my rule. I still love my rule. Because there's many times that's going to save me. and we'll find out whether or not it saves me if it comes up here. Because in order for that to pay, if you would have said, well, I'm still going to stay in this, it's going to pay me, I want to be visiting right here. You start paying yourself there and there. Midpoint of that candle. Discount array. If it rips through here, it comes back, you pay yourself there and there. You entered in there. Inside the range, pay yourself. Because we could be consolidating again. If you're up here, see how it closed above and popped back down, and I said that's my rule for getting out, you may say, here's the slack I want to give myself, is the fill of this fair value gap. If I trade above the fair value gap high here now, I'm out. This one, I'll discount this because they're so close and there's a breaker right here. If I trade above the mean threshold of that candle, which is the breaker, I will get out there. So you could fluff your rules up a little bit and say, no, I think I'm going to wait for that order block there because that's a good solid senior candle array. So if I close above that, then I'm wrong. So I'm going to forgive this one right now and give myself a little bit of gap there. That may be the way you might want to fine tune it. I don't know. It's up to you. But we'll see if it takes out that high there. And I can just give myself a double pat on the back saying, good for you. I'll be right back. I've got my coffee. It's just gone right through me. Gonna have to pee. I'll see you guys in a bit. Well, we can be saying knowledge power tools sounds good to me. I love it. Smart money concept, yes. I'm on the Telegram now, but can't see any messages or chat history. Yeah, sometimes I think new people came in, you don't get to see any of the other stuff. I might have to adjust that on there because you're the first one to do that. Well, first one to mention that. But if you're on the Telegram now, Paul, hi Darren, after watching Learning during your hot TV show. Paul, welcome Paul, if you've just popped on there. I just see Paul's. If you're, are you seeing anything there, Trader's Luck? Invest. Had to take a phone call. All right. I'll go and cook something. Let you guys make some more money. You go, kitty, you go. Fernando, we can do it. I don't know why I think Fernando has like Antonio Banderas' voice. Hello, my name is Fernando. I'm Puss in Boots. And for some reason, I think Fernando's got one of these deep, sexy voices. Wow. Trader are lonely. Totally agree. D is the best. Lambo. Niv Trader. That's beautiful. Thanks, Darren. Victor. I love Victor. Victor. Please keep the carrot closer for the maximum. See, it did take me out finally, right? So here's I'm happy now that my little stop right there above, I'm like, now I'm out. If you manage to collect some peace back here, right at the rejection, there's nothing at the rejection. It finally took me out. So we've broken above here with a body candle, come back, find support at it, now continue to the upside until proven otherwise. We're bullish again. We're digging back into this crap. Keep the carrot. Sorry, man. We're going bullish now. Till proven otherwise. It may be not what you want, but that's where the carrot it's going. Look for 50%. You don't want more than 50%. I don't want to see that old high get hit. 25% gives me weakness. So run above here. Give me a nice little swing point. Break below this structure. Come back into it. That'll be my swing above this high. I'd be happy with that. To reverse my direction again. But otherwise I'm bullish. We'll put the carrot sideways so we're not giving it too much. Let it make a decision. Please keep your carrot closer. I entered short. Johnson Geek, I went short. Oh, you did a turtle soup, did you? Good for you. Lunchtime. There you go. Jeepers, we called this. Did we not call this? Saying we'd like to see it run back up and take that out at lunchtime and then come back into the range. We're calling that way earlier ago. Come on, give me a nice big reversal happening up here. See, the problem with your turtle soup is where's your stop loss? Where is your stop loss? Still bullish. We need to chat. Has a sell limit at 556 and canceled it before it got there. This is getting so frustrating. We need to chat. Has a sell. Invest had a sell limit at 556, and you got taken out. Okay, so if you had a sell limit at 556, right there. Okay, so here's what you do. 556. If your entry was right here, invest. Here's where your fail safe will save you. And again, this is just my fail-safe. Whatever you develop, this is something new we're introducing here. Michael doesn't talk about it, but it's something I'm introducing to you folks as a fail-safe, not just a stop loss. Let's say invest, you're right here. See that? You got in right there. And it traded above you on the close, and you go, I'm on the wrong side of this. The moment it trades back down to me, right there, I'm out. You're break even. Move to the sidelines. Don't get frustrated. Just move to the sidelines and wait for this. You want to see the body close below it? Pop into it right there. Now I'm bearish. Right there. So this guy here. Now you go, oh, I just was bearish right there. But you did this broke above you. So you get out. It's running for your highs. It took you out. Comes back. Now you can be bearish because now you've got the signal that says be bearish. Now you can put your entry in right there, that 556 again to go short. Because if it trades above you, you get out at a break even again, because we might be running higher. But right now, we're bearish. Start paying yourself inside the range at the order block, breaker, low, order block, range, 50%. Pull your fib tool, whatever method you want to use. And then we'll put our carrot down here as some motivation for Victor. Don't forget it can still pop. We'll do this one. We'll trade right in there. Sell. Put a stop loss up here. This is what you got to do, Victor, or your invest. This is our setup right now. So if it fails, I'm going in the same, relatively the same place you did, 556. There's your entry. There's your first entry right there. Your second entry is right here. So let me just put my first entry's there, second entry's there, third entry's there. If that's what you're doing, there, I'm in. So now if I'm wrong, we want to see, I don't want to see a body, and we've got an order block. So I'll give it all the way up to this order block. I'm going to give it a little bit of slack. But typically you're going to say, that's my short right there. And you want to aim for first. Now my stop loss does this. I take my stop loss and I, come on. And I pull that sucker right there down to break even. I'm at 50 bucks in profit now. See, that's how you do it. Now, and I don't care. It's a zero stress trade. Now, if I take a piece off at this one here, if it comes back and gets me, I don't care. Make a bit of, I make 60 bucks or 10 bucks. It's going to pay for my trade. And you don't care. You move to the sidelines and wait. You're in a consolidation here. You're just trying to grab anything. So here's that first order block I didn't take any profits at. I'm going for a rejection block here. If it pays me, great. If it doesn't, I'm at $10. That pays for a new coffee. And this is zero stress trade. Like if this rips down here, you're going to be like, yeah, I nailed it. Right? If it doesn't, there it's just about to come in. Oh, literally came back and just give me a kiss. I like it. Give me a little kiss and then send me on my way. Come on for the carrot. Look at that. Right to the, give me a kiss on the schnoz. Break this low and I'll come back to, I'll move down even further. I've only got one. So here's how we can do it. This is what somebody else had mentioned earlier. So I'm going to do it right here. Oh, we're getting too much money too fast here. Buy. This could just keep ripping down, but this is good. That's going to be where I'm going to buy. I can pay myself right there. So I'm going to move this sucker into a little bit more money. You should be paying yourself right there. I've only got one on, so I'll let it come to me here. This is a zero stress trade now, Victor, or invest. You see that? You wait for your setup to happen. Wait for your fail-safe. Have your fail-safe in place. If it fails, you have it in place. We entered in, we have a premium entry right there. So if it fails, we're going to break even. Oh, there you go. You just made 100 and some odd bucks. And if it keeps coming down, you take a portion off there. If we had the 6 on, we take a portion off there. We take a portion off here at this fair value gap fill. And then at that point, and then let the rest run. Just keep, and then you trail. That's what's so dynamic about my stop loss or my fail-safe is it's a fluid. It's not like a traditional trailing stop loss. It's fluid. It's dynamic. It's where the market will fail and go back the other way. You know what I'm saying? You have to know where the market's going to turn around, and then you can stay on the horse. That's what the fail-safe is for. It's the part that says, I'm trying to flip you off. So if this rips all the way down to here, I can say to myself, all right, I can put more on there, or I can just keep nibbling away at this. Every day, keep nibbling away at these little wins. Put $100 in your pocket, $100. Do that 2 or 3 times in a day. And you've paid an entire wages for some people. We got a guy in here, he works his ass off on the highway, cleaning up the highways for 120 bucks a day. What's that? That's craziness, man. Full respect for the guy. He's out there busting his hump, cleaning up highways. And there, I just paid his wages in one day, in 2 minutes, with one single lot, or one single contract. So, you know, bless that guy for plugging away at it and giving it a try. And he's still in here trying to learn this stuff. Nothing but respect for him. Nothing but respect. Pay yourself out there. Now, if it comes all the way back in here, you're going to say, damn, why didn't I pay myself up there? You can start the whole thing all over again. Start your trade all over again with $100 in your pocket. Just rinse and repeat. If it goes through, then get out. Right there. There's your entrance. So now wait. If it trades against you, you can give yourself a buffer up to this order block here. Still, look at that. We're still below. We're still bearish. We just came back into a premium optimum trade entry to get ourselves on again to come back down. This that's happening again here is the same thing we did way back over here, somewhere in here making money. I don't know where the hell it was, over here somewhere. We're catching retracements back and forth. Same kind of thing there. You've got this range that you're about to be created in. So there's a first payout, fair value gap, if this doesn't trade above. If that's your entry, you say to yourself, as soon as that one pops up, comes up to here, I want to see it snap off of there, or the worst case scenario is the mean threshold. If I lose that, then it's going to take my stop. And everything you made here was just to buffer that trade. Come on down now. You're inside this range. Pull your fib tool here and trade 50%, 62%, and start getting out. Because you're in a consolidation. You don't know where it's going to go. If it just comes back there, you pay yourself out. You're done. Move to the sidelines. You just collected all this and all that to there without any losses. And we're doing this as it's happening. This isn't hindsight. I'm not form-fitting this shit. You're seeing it live. You're seeing it live. If it hits this, take some more out here. It depends on what you're in. Slam that sucker up to bring yourself into stress-free right now. You're in a consolidation. You're into this range. Bring yourself to break even. Put a couple of bucks in your pocket. Pay yourself here and wait. You're in this freaking consolidation. Get out of that. Or let it sit here and stress-free. Don't worry about where it goes now. Take a deep breath and relax. Just relax. Well, this happens all the time. I don't know how many times we've given you these different entries this morning. There's been dozens of them. And we're still on the horse, by the way. It has not shaken us off. It has not shaken us off. We're going to ride this thing till it's exhausted and it walks us back to the stable, still stuck to its back. If this doesn't impress you about understanding an algorithm, and do you notice, did you ever hear me refer to any Bollinger Bands, any MACD, any Elliott Wave, Wyckoff crap? Nothing did I refer to. I shouldn't say crap because I don't understand Wyckoff, so I take that back. I apologize. I don't understand any of that stuff, so I can't shoot it down. But what I'm saying is, you don't see anything on my charts other than little boxes that I draw and watching candle to candle, minute to minute. What range am I in? What PD array am I in? And I'm staying on the horse the whole damn time. We have not been thrown off here. We knew when the market was turning direction. We knew how to get on it. We knew how to have a fail-safe. We knew we had a stop loss for those rippers that go through.
preparing, and we knew how to nibble hundreds of dollars in little 1-2 minute runs. That guy has to work all day, and we made his wages in 2 minutes. And we just made his wages again in 1 minute. That 1 minute candle right there was probably $100. That's most of his day out there humping freaking bags of garbage and shit on the highway. That candle what does it represent to you? That's a lot of hard work for one person over a day, and you just saw how quickly you can make that kind of money on one single handle. I hope this is kind of getting you motivated, get you excited about reading the markets. You see how now we're back into this range here? We went premium discount. So we went premium discount right back up into a premium range to drive through into a discount again down here. And now we want to run through here and there. And that trade we took there to there, I'm okay with that. If it's taken off now, I don't care. A couple of $100 in your pocket on the weekend. There's your rejection block. Done. There's more one. There's another one there. Scale that out. If I had 6 on there, like I said, I would have taken out one there where we did, one here, one there, one here. Take one out there, here, depending how much you got left. Move your stop loss. Your dynamic stop loss now moves. If I break this to the upside, I'm going in the opposite direction. I've gone below a swing point. If I break this to the upside, so my stop loss goes here. Because this would be like, if I was going to go long here, this would be my first entry to go long, so that if it traded back through it, came up to it, then I would still be going short. That's my fail-safe. So my stop loss has to act like my new fail-safe would be if I was going in the opposite direction. Does that help? So that's how you have to manage. It's a dynamic fail-safe with a stop loss that's constantly trailing behind you. So in other words, if I break this point here on a swing to the upside and come back to it, this short that I have on would be off right there. That's my fail-safe. And if you want that explained in more detail, pop into the Telegram chat over the weekend. I'll see if I get to it. We'll have a little chat, and I'll show you how to manage your fail-safe on the way down. I just want to show you how you can just clip $100 in your pocket. And if you can't get rich doing $100 every couple of minutes, and you add them up at the end of the day and you've got 10 of them, relate that to the people in the world, and you're making more than 90% of the people out there in the planet. If you're clearing $100 American dollar or $1,000 American dollars a day. And if you think you can't nibble that, you're not watching. You're not watching. Wow, traders are lonely. D's the best. Hey, it's beautiful D. Enter short. We need to chat. We are already approximately 76% of the weekly range. Invest. Make sure you have a chat with yourself too. Don't forget how powerful self-talk is. There is setups every day. Take one with a high confluence and have some faith. Lucas Hutchison. I like the way you're thinking, my friend. Hutchinson, Lucas. Lucas Hutchison. You don't happen to have a cousin or a family member named Jacqueline by any chance, do you? Jacqueline, if you're watching, love you. She's one of our firefighters. And amazing lady. That woman can work, let me tell you. She's smart. Go up in the mountains, you do a mountain rescue. That's a girl you want with you. She is awesome. If you lose, start again tomorrow. If you win, awesome. Start again tomorrow. Look at, if you lose, what did you gain in the loss? What lesson can you learn from it? There's no such thing as failure, only feedback. Only feedback. Now watch right here. See how we've broken this high, this swing point here? We've broken that high. Are we going to close above it? If we do, we're back into this range. We've now broken direction and moving to the upside. See, we've closed way above it, and we've cleared all the way back up inside that breaker. So if that comes all the way back to here, you say to yourself, I'm going to get long right there. Because if it fails and goes short on you again and comes back to you, you can get out before your stop loss is taken at break even, and you can say, well, hey, look, I got in at an opportunity to go short right there. Or sorry, long right here. If it continues to take out the highs, wait. Then you wait for the reversal to happen. Then you trade between the reversal and this one that you didn't get a chance to get in on because it's clearing out your objectives that you'd be aiming for. You wait. You wait for the reversal to happen, because look what's happening here. See this little swing here above that little high? There's the reversal swing. You come all the way back into it. Poof. Now you want to see if this closes above, and it does. So now if you want to get out right, if it pops up again, you get out. Right there. You're out. You wait now, because you're between this guy and this guy. So you wait. It may continue going higher. This one goes shorter. This one goes higher. Now you're between these two. You've made it. Now it blew through you right there. So that gives me an indication it wants to go higher. So you're bullish again. Hits the rejection block. Now you want to see it come all the way through this. Come back up into it. So body close below this. Trade back up into this or this or this to go short. That's a big long one. So you got to. I'd like to see that. Oh, sorry, they have not run above this high. So I wouldn't validate this one as a swing point, because it has to get above an old high. It hasn't happened yet. So we're technically still bullish. Oh, sorry, bearish. Even though we broke above that, you move to the sidelines now and wait. Wait for a swing above a high for this kind of setup to happen. Copy. Waiting for noon, I guess. Yeah, crazy Friday price. Invest Lucas. Thanks for the words. Thanks. Thank you for sharing that, Lucas. Johnson Creek. Note, hit my stop loss. Christian, I'm done for the day. Thank you for the stream and for the teachings. Have a good weekend all. Christian, have an awesome weekend with your lovely wife, and we'll talk to you again on Monday. Johnson, the doji candle. The doji candle. Ah, the good old dojis. That's retail. We don't care about dojis, but they are interesting candles sometimes, I tell you. Sometimes you go, that's a doji. Why didn't you trade the doji? That's retail thinking. If you find a doji candle that supports the stuff that we're doing right here, take it. If your doji's your entrance and not what we're showing you, then take it. Invest before it moved up. NVDA just broke a hard resistance. Wonder how NQ is going to react. See, now that stuff there, invest, I don't care about. That does not change how I trade this chart. I don't care how great NVIDIA is doing. Does not change how we look at this chart right now. It may give you an overall bias, perhaps, that you want to help. And then you look for that bias on your daily. Is that bias supported by your daily candles or your 4-hour candle? If it's not, it's fluff. It's just going to give you some volatility in the market. And right now we're in a consolidation, so we could use a little bit of volatility, right? And sorry, that's just my way of looking at it. I don't look at the fundamentals of that NVIDIA affecting the markets, and I'm sure it does. Somebody might say, of course it does. It does more than the Canadian gross domestic product in a year. The company does more than Canada. So does it influence the market? Maybe. I don't care. I'm trading this. If it's affecting it, I get to ride it. Whatever ripples through here, we'll ride it. We'll ride it out. I'm going to try and drink some water here. Sorry. Oh my goodness. You've seen me at my ancient old. Look at how young I look now. Don't I look pretty with better light? We've had this whole morning. You get to watch the Crypt Keeper the whole morning. So the order block, see here, we validated, came back to it right here, getting short inside this fair value gap. Look at the range you're in now. Get back into this order block. This strategy can only use on NASDAQ. My friend, this strategy, you can use it on every asset class. Are you watching me? Every asset class, any time frame, anything. Pretty bold statement, huh? Maybe that's a pretty contentious statement. Maybe it's a pretty arrogant statement. It's true. Go look. Everything I've showed you today, go look through any commodity. Go look at wheat. Go look at cotton. Go look at sugar. Pig ears, pork bellies, I don't care. You go look at YouTube. Go look at Google. Amazon, I don't care. They're all saying the same. They're all doing the same thing. And it has nothing to do with all that news stuff. This is how you stay on the horse. You pull out. If you don't believe me, come in on a Sunday. When we're chatting on a Sunday, if I get together, we get together on a Sunday. You say, pull up your favorite stock, and I'll show you how to trade it. It's not because I'm great. It's because Michael's taught us something that is the little key that unlocks the market. Now, you may want to ignore that. You may want to say, no, that's not true. You may think he's full of shit. But if you can't see what we're doing here on the 1 minute chart every day and not see the accuracy that we're showing you every day, it's not just NASDAQ. I can show it to you on any one of these assets that I go over every morning. And we go over lots of them. It literally goes everywhere, my friend. Stick around, Johnson Geek, you'll see. I'm not kidding you. Good day. Are your entries paper trades? Chris, yes, they're paper trades. If so, when do you trade your real account? My real account is over there. You won't get to see it. If you can't get your answers off of me trading demo in front of you, you're in the wrong place. You're coming in here with the wrong attitude. You're coming in here expecting me to impress you. I'm not here to impress you. If this doesn't impress you, find someone else, man. Find someone else. You're in the wrong place. Yes, it's demo. And if this isn't doing the same thing on your live account, then I'm full of shit. There's too many people come in here with that attitude about, well, is this all demo? It's demo on mine. If it's live on yours, you're making money. Because if you're doing the same chart I'm doing, you're making money. Don't worry about whether or not I'm making money. I'm not here to sell you anything. I'm not trying to make money off of you. I'm just trying to show you how to read the chart. So, yeah, I know I'm sensitive. I just hate it when people come in with that, well, you're just a demo baller. Whatever. Michael's been a demo baller his whole life then. And we're all just playing a video game. Whatever. If this same thing's happening on your live account, excuse me. If it's happening on your live account and you copy a couple of trades, then you just made money and I didn't. I demo balled it. Who gives a shit what I'm doing on my live account? Watch what I'm doing here. Do you see entry short at this position? I don't see squat sitting in here right now, except sideways. We were short off of this here. You're still sitting on there. Your fail-safe is still sitting above you right here. Watch this candle here. If it closes above, comes back, get out. If you did enter in here and you came back and you entered in again and you did the fib tool like I showed you, and those of you who are on live charts, look for yourself. If your live chart shows you right there that that was an entry, you could have taken that. And if you pulled your fib tool to 50% and then moved to break even, you just made some money and it's just come back and taken you out right there. So you made money to 50% and you broke even on the rest of it and you moved to the sidelines and wait. If you made money on that live, good for you. If you demo balled it, good for you. You're practicing. Until you get confident that that setup works, then you got it. We worry about what I'm trading on my live account. Watch what we're doing here. I'm not here to prove anything. This is proven. We're just sitting here watching it going, shit, this stuff works. Doji sounds rude to me. It's all smoke and mirrors, invest. It's all smoke and mirrors, man. Yeah, I'm all just watch the left hand while I reach into your pocket from my little computer and steal your money. I'm not selling you anything. Cesar K, hello. And whereabouts in Canada are you? I'm in the mountains, my friends. I'm in glorious Alberta. Johnson, okay, thank you. How do I find you on Telegram? Kenneth Bauer. A borer. You can go to right here on the channel. Click there. Click that little link right there, and you're in. And if you're coming into the channel, I'll tell you again, if you come in with attitude, you're gone. You better come in with a lot of love in your heart, and you want to help people. You want to learn? Learn. They've got lots of people smarter than me in there that can help you out. If you go in and you see, if I see you shoot anybody down on anything they're trying to do, I'm not here to be the police, but man, I'm not going to tolerate that shit. There's way too much crap going on in the world. I want you guys to be nice to each other, help each other out. So I got very little, as you can see, very little patience for people who aren't focusing on what it is we're trying to show here. And they're always so suspicious about somebody out to screw them over. I'm harmless from where I'm at. That's the power of your click button. If you don't like it, click off. Move on to someone else. Someone's firing hearts in there. I love you. Love you guys too. Sorry. Learning to rant, eh? How funny. See, Terry, it happens, mate. You start getting really passionate about it, and I get very protective over the people that I know there's people in here that want to learn this stuff. I know there's people that truly love it, and they love what they're seeing. And then when somebody else comes in and threatens that, I get really bristly. It's like, screw that noise. There's people in here that really see this for what it's worth. If you don't, that's what the click button's for. Move on. So I'm learning to rant. I'm sorry. I'm practicing my ranting, Terry. I'm practicing my ranting. Learning to those equal lows at 18,531. 18,531. Yes, look at those equal lows. Do you see how this is still giving you multiple? So let's just look at this one here. One, and again, it's all hindsight, but if you keep following the same rule again, like I entered in there, or all three of them entered in, and you went short for aiming for stop losses, for discount arrays, and then you clear out, you use your fib tool to go down there, you come back up, it gets you in again, you use your fib tool again to clean you out, and then you come back up, and then you use your fib tool again inside here to go out, then you use it again in your fib tool inside this range to go out, then you use it again for your fib tool inside here to just clean up house. You've had how many opportunities, and you're just repeating the same setup over and over and over again, giving you the chance to go, I get to do this again. Wow, I get to do this again. Nice. I keep getting to do this until I get taken out on the upside. I'm bearish, 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 bearish over again. And you just took out another rejection block there. Am I getting passionate? Do you feel the passion in my voice, folks? Do you feel the passion? I bet that guy wishes he never said anything now. Kitty's like, Friday vibes, man. Yeah, baby. Friday vibes. 46 YT, thumbs up. Way to go. I think people ask that because seeing someone with experience like you trade it live, it gives them more confidence to take trades themselves. That's how I feel anyway. Could be wrong. You know what? I can respect that. I can respect that if you see me take it. But if you see me take it on a demo account, how does that increase my validity or the validity of a trade if I'm doing it live? Then we're not talking about trading. We're talking about my psychology. Do I trust what I'm doing, what I'm saying? If I'm doing it live, that means I'm trusting it. We're not talking about trading anymore. We're talking about whether or not I believe what it is that I'm doing, right? That has nothing to do with the trade. The trade is one thing separate. If I'm showing you my live account, I'm showing you that I trust what it is that I'm saying, that I'm not just vocalizing it here. You won't get to see that. You'll never get to see that. You have to work on that piece yourself because that's the piece I'm working on the sidelines. That's my private life. This I'm showing you. You try it. If you like it, works great. Find your trust in it, and then you'll trade live and you'll sit on the sidelines and not. You can tell everybody all about this stuff. It's not legal for us to give advice. If I give you my trading advice, like you need to do this, this is how you trade, this is how you must enter here. I'm just giving you my ideas on how I do setups, and I'm doing it on a demo account. We're playing. It'll always be a video game. Now, whether or not you turn that video game into live money for you, your path, your journey. If you see me take I will try to take more trades in a demo account for you, so you can actually see something up here and say, is he taking that live? Will you take that live? Don't worry about if I have. Will you? Just keep sticking around. Whoever it was that said that, I'm not going to scroll back through it, but I apologize for coming off so aggressively, but stick around and watch and see if you find the truth in what it is that I'm trying to show you here. And if that truth translates into your live charts as something that you can make money off of, I'm happy for you. If I never make a penny off of what I'm talking about here, that's my own downfall. If you turn it into money and you watch people in here, they're doing it. They're taking these trades, they're seeing them, they enter them, and they're going, I just made $200. I just made this, I just made that. That's their live account or that's their demo account. They're seeing it work for them. They're seeing how it's paying them dividends. I've never found any logic in, you got to prove it to me. I don't have to prove shit. Watch what I'm doing. That'll prove all the proof you need. Oh, Charlie's out and about. For a thumbs up, way to go. I think people, finally, you're telling them. Adrian. Sir, I don't mean to disrespect Chris Garner. Man, sorry, I didn't mean to come across as a hard ass. But there's clear logic in what I'm telling you. I don't mean to come across as disrespect. I'm simply asking a question about your demo trades. I too take demo trades and also replicate it on my real account sometimes. Apologize if you felt disrespected. Oh, sorry, Chris. My apologies. I come across as a hard ass. I just hear that statement coming in every once in a while, and people say that, and I go, oh my God, watch what we're doing. It has nothing to do with whether I'm taking the trade or not. But no, I have no problem, buddy. You and I totally respect, peace, love. I'm with you. I'm okay. I have no hard feelings. I'm good. I'm over it now. I move on. Get the click out of here. This is the ICT church. No, you be nice to Chris. He's just throwing a question out there. We got nothing but love for you, Chris, man. You're allowed to come in with a question. It's all good. We're having a discussion. Everybody's allowed to disagree. Just have a discussion. Redeem and restore. Hi, everyone. Redeemed and restored. Welcome, welcome. Chris Alley, I got to study the application of the fib tool. Oh, Chris Alley. I just remember Chris Alley. This is the guy I used to go to paramedic school with, Chris Alley. He was a smasher, man. That guy, when we played senior men's volleyball, I could set up Chris and, man, he would just, boom, he would slam that ball home. And if that's you, Chris, good to see you, buddy. If not, Chris Alley, got some love for you, buddy. I like the name. Russell, good call. Derek, hey, redeemed and restored. Love the name. Same, 100%. Love it. Derek, lovely. Took those lows out, but haven't gone further yet. I tell you, this has been just that little inversion there has paid you so many times. If you just keep coming back, rinse and repeat, and know where to get out in the range that you're in, pull your fib tool and let it pay you dividends. You were never took a loss here. You have just collected money over and over and over, and you just keep getting opportunity after opportunity to keep bouncing off this thing and keep hacking. You've got $1,000 easily in here with one handle. You would have had $1,000. If you know how to play this, use your fib tool and practice this little bit of consolidation we're in right now. Everybody over here is waiting for something to happen. You're clipping coupons in the 1 minute chart, folks. You're just clipping coupons, moving to the sidelines and just giggling away. You walk away from the arena at the end of the day with $1,000 in your pocket, and these people are still waiting for a pop fly. You've been eating popcorn, hot dogs, beers. You're leaving the thing drunk with happiness. You played a great game. These guys are waiting to get off of first base. Not that it's wrong, but when you're in a higher time frame, you got to wait longer for something to happen. And we're seeing it right here on the 1 minute chart. Structure hasn't been broken. And when it does get broken, we trade from one to the other. We don't get an opportunity. Here's a swing point. See that? Swing, body breaks above it. You don't get an opportunity to get in on it. It just runs all the way back up, gives you another opportunity to get in. Look at your fib tool from here to here. You get in, trade your fib tool on the way down, 50%, move to break even. 62%, move to 50. Hit 70%, move to the 62, and you just comes back, takes you out, move to the sidelines, wait. Oh, look, it gives me another chance. Try it again. You come back down and you're inside. Well, it's inside that candle. You'd have to wait for another run back down. Look for a rejection block. If you don't get it, it comes back up. You still got your fail-safe rule. Comes back up again, again, again. Now it finally comes down and you get to look 50%, 62%. Oh, look, it's taking that out. Oh, it's taking out the lows. Finally, I clean out everything and wait. If it comes back into here one more time, rinse and repeat. But now we've got the swing point. Sorry, I just saw this now. Swing, swing, takes out that swing. There's your fair value gap. Where's the body? Look at that. Literally closes on it and then gaps down underneath it and then runs back up. Order block, rejection block, up here, I should say. So look for those upside candles. That literally, if you're watching this and you said, oh, it's closed right on it, I can take it, or it gap down below, good. Now you can get in on it. You got to be really sharp to catch that quick. It'll literally give you an opportunity to go long. And then your stop loss will be sitting here at 1%. And the moment it broke up above into this order block, I would have that sucker. Well, where are we at here? Let's have a look. Let's pull the fib too. Let's do this the right way. Look at that. You literally get in on the 50%. And you say, all right, my stop loss is here. The moment I make 62%, whammo, right up to break even. Now it's a zero stress trade. I paid myself here. I go up to 70%. I pay myself there. Then it opens, comes down, and takes me out there. You're out of the trade. You took that from there to there to there, and then you got out. You got a little bit of extra profit in your pocket. Or you just move to break even and then just pay yourself as it goes up. Just leave your stop loss there. There's another method you can use, using a fib tool. Or forget the fib tool, trade the order blocks, trade the senior discount arrays. There's your upside array. Now that you've broken through this you've closed above here, and above this candle's actually inside the bigger one. Mean threshold, that's closed above there. Aim for this dude. Fair value gap fill now. Take out the old highs. Just wick up there. Take that and wick and close off down in here. And then we've got the third attempt to continue to go lower. So, or 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got 10 chances to get in on this glorious little. If it pops above you now, comes back and closes on there, then we're going bullish for this order block and higher. And we're bullish right here. Confirmation of bullishness is above a premium array that supports price going up higher. You'll get support off of this to continue up. So look, 4, 3, 2, 1. We're closing above it now. Close out right there. Your break even. Move to the sidelines. Fail safe. Perfect exit. Entrance, exit. If it comes back in, who cares? Chances are now it's going to start running up to this order block. We're bullish. And you just saw it happen right there at on the turn of that candle. And then I'll change my mind again. If we trade below that candle, come back into it, then I'm bearish again. That's the linchpin for high, for going higher. So watch, see what happens here. Lovely, took those lows. Kenneth, as Michael has stated, he has 81 different techniques to trade. New students get overwhelmed trying to learn everything. I totally agree with you. You need to find what draws your eye and what you're comfortable with. Totally agree. Lambo's kidding, I get it. Darren, your breakdown is great for students to gain better understanding. Thank you, sir. You're very welcome. You're very welcome. Garner, I got love for you, buddy. Oh, Chris, you're all right. You're okay, buddy. Don't worry about it. What sports do you like, Darren? Played college basketball for a year at Medicine Hat a couple of years back. Oh, you're from Medicine Hat. Seriously? You're in Alberta? Sweet. Lucas, we got to meet up for coffee or something if you're still here. My sports, I was a racket. Anything with a racket in my hand, man, I was lethal. Ping pong. Oh, sorry, table tennis. And tennis, racquetball, squash, volleyball. I was a killer at volleyball. See how that's run up now? All because, and we knew it was changing direction right there. We got out right there. Your stop loss is getting squeezed if you didn't have a fail-safe. You see how that fail-safe is going to save your ass, people. Have a fail-safe. If you do not have it in your plan, stick around. I'll show you mine. You can finesse it, do whatever you want with it, call it your own, market it as your own. I don't give a shit. It's still going to serve me the same way it serves you. If you make money off of it, I'm happy for you. But that's the fail-safe. It's not a Michael thing. It's just my little thing I added in because I'm a little more paranoid about losing my money. There's your rejection block yet again. So if it rolls over here now and comes all the way back down, I'm all right with that. I didn't want to take the loss, didn't want to take the chance. But there's a nice little rejection block that you don't get your highs taken. I'd like to see a nice little swing point happen here. We can get back into that range again. Yeah, so karate, I was into martial arts since I was a kid. I tried Northern Shaolin Kung Fu. I did traditional style. I did Wadokai karate, Shotokan karate, and yeah, did all that stuff. Hang gliding. I've got a hang glider in the garage. Jumped off mountains. Scuba diving. I love that. Anything is high adrenaline stuff. Snowboarding. Never got into skiing. More of a snowboarder. Never played hockey. I did once when I first came over from England. I fell on the ground and my dad shot me the puck and hit me in the knee, and I didn't have any padding on. And I was like, I hate this game. Football. I was into football. I was a quarterback in football until I realized, again, from England, I didn't understand this whole football game. I could throw a ball like nobody's business. I had a really great spiral and all that. So anyway, I was a football player in the Pop Warner Football League. And I remember having this, I had to learn all the plays. So it was like a T48 pitch. I still remember that one. T48 pitch on two. Ready? Break. Everybody go. And then I would do this T48. So I'd take it and you do this fake, and then you turn and you pitch it to the guy who's running behind you. So that was the T48 pitch. And the coach used to say, look, you got to get rid of that ball quicker, because I used to do it kind of slow, right? He goes, you got to do it quicker. I'm like, why? He says, because you're going to get hit. And I'm like, what do you mean I'm going to get hit? I didn't know nothing about football. What do you mean I'm going to get hit? Little English kid. What the bloody hell you mean I'm going to get hit? And they said, those guys, you see those guys right there? And I showed you this big line of guys. They're all trying to crush you. And I'm like, what the hell are all these boys in front of here for? Then he says, they're there to stop them. I said, well, then they should be fired. If he comes through and he hits me, they should be fired. It's like, no. Their job is to try and stop them. I'm like, that's stupid. I'm not playing this game. And I left. I was a little skinny kid with a football. And I'm like, I'm leaving. I'm going to go back to playing my football, the way I play it. And then I got into soccer. So football didn't last very long for me. So that was the sports that I'd been into. You see how that right there was the turn point that we knew that we were going bullish right there. I'm out. Now I'm going long. Now, if you had an opportunity to go there and you were to catch this and say, I'm going to go long here, you're in a full-on, if you're quick and you catch that, say, I trust. Now you've got to say, do you trust that? Do you trust that level to go long? The bull has not shaken us off at all. The bear tried to shake us off, didn't shake us off. The bull tried to shake us off, didn't shake us off. Bear, bull. Bull, you jump off the bear onto the bull. The bull's not going to shake me off either, because I see when it turns. I see the market make that move. These guys have no clue when they're trading on a higher time frame that we see. We can switch back and forth. That's the linchpin. In a premium array, when you take out a premium array on the upside and come back into it, we're going long, at least for the next array. Don't overshoot. Just think to yourself, as soon as it clears that rejection block, move to break even and pay myself. Pay myself at the high. And if I get more left over, then I move to from my break even to my previous trade. And if I break out the high, then I move to the rejection block and let her buck. Just like you're slapping the back of that bull right now. Just yee-haw! Now, how are you managing this? This is another level to your trading. Take the rejection or the fail-safe and trail it dynamically behind you now. So this is where you need to practice looking at your fail-safe and say, when does that trade change for me? I've broken a high. See this right here? If this trades through this on a close and comes back to it, what does that tell us? We have a reversal. Then we're bearish again, and this bull trade closes out there. That's your fail-safe for further upside. That's what I mean. It's a dynamic thing that you're following up behind you. So when we start to break a new high and there's a new fair value gap above you that forms, you trail your stop loss up to behind that, like you see this happening right here. Order block. I like to see that. I like to see that as a nice propulsion candle now. come back, find some support at it, keep going. Create a fair value gap in here. I'm all right with that because now my stop loss will go down here. Because if I break this, come back to it, I'm out. Because for a short. You see what I'm saying? We're staying on the horse and we're following it up with a dynamic fail-safe. Your stop loss is here. If that creates a fair value gap with, if it creates a fair value gap there and we start to trade back through it and to it, it's the reversal pattern that we keep talking about to go short. And it sounds pretty simple, but try it out and try it on every asset class. Come back to me with an asset class that doesn't work, and I'll show you where somebody's screwing somebody in the market. Because it does. It does. It works on everything. If you don't believe me, you don't have to. I don't want you to believe me. I want you to see it yourself. God, I sound like Michael now. You don't have to believe me. Go back through the charts. Do the research yourself. I already know it works, so I'm not here to convince you that it does. You need to convince you that it does. Right? Let me get back into this. Lucas, what sports that you know? College basketball. I sucked at basketball. I was super aggressive. I could get the ball. I could dribble it all the way down there. I'd throw it at the backboard. They'd be like, oh, somebody get a rebound. Hancock's going to blow it off the rim. I could hit the rim from anywhere on the court, but get it through the little ring, forget it, man. Badminton, I was a killer. I was a provincial champ. I used to coach badminton. Loved badminton. Jet lag. Oh, I love the name, jet lag. Welcome. Just after top of the hour before the New York AM session, hour during the top of the hour macro, and then 1 minute fair value gap short setup. Jet lag, I love that name. I like jet lag, but he's always tired, you know? Every time I talk to him, he's off in the corner having a sleep. He's so bloody tired all the time, old jet lag. I love that. Lucas, I'm in Vancouver, but still scholarship, but had a scholarship money, so went over to Alberta for a year. Too cold for me. Ah, you wussy, you're out there in Vancouver. That's where Baron's at. Carla's kid is out in Vancouver. We love Vancouver. Her dad's heading out there on Monday, Tuesday, next week. And then we're heading back there. We're heading to Vancouver on 29th. So it's going to be fun. We'll be in Vancouver for a short period of time. Then we're going somewhere else. But we pop out there. We'll have to have a little meet up for coffee sometime, Lucas. You might even be the first guy I get to do a little video chat with and put it up on our community channel. So when I meet up with you guys, we can have a little drink, have a laugh, have a chat, and then you guys get to see a name to the face. If you want it to go on the channel, on the community channel, I'll start posting meetups that, I meet you people from around the world and they're going to be on the community thing there. So you get to see each other and you get to put a face to the name. Some of these names that are making a name for themselves here, like Lambo. When I meet up with Lambo one day, or I meet up with Terry, because I'm going to England, so I'm going to meet up with Terry for sure. It's definitely on my bucket list. Lambo says, I need a fail-safe lesson. Yeah, we can do fail-safes. Come on to the Telegram channel there. We'll do a fail-safe thing, or maybe I'll just do one on the weekend. There's so many things we can do. Over here, we call it basketball, netball. That's right, they do call it netball in England. Dave Barry, that 1 minute touch into the 15-minute bias was nice. So look at your 15-minute chart. You see how we have a swing below this low right here? See how this huge fair value gap is now broken to the upside? What you want to see now is in the next 15 minutes, do you want to see that close? The next 15 minutes come into it for a long above the rejection block, the high, and dig back into this higher range fair value gap above you, and this fair value gap here, and this breaker right here. right? There's so many different little PD arrays you can aim for. Just getting back inside this swing inversion. So you finally waited all this time for the 15-minute guy to finally get his entrance or her entrance. Meanwhile, you guys have been sniping and eating carrots like you wouldn't believe here. No hockey. Isn't that Canadian sin? Yes. Well, I could say lacrosse is the true Canadian sport. That's the first official sport in Canada, was lacrosse. But hockey, yeah, I never settled in on hockey. Rugby. Stupid me, I was in a scrum once. I was in a scrum and I had the ball. I roll over and I thought, oh, I wonder what it looks like being in the middle of a scrum. So I rolled over and looked up and just got a boot to the face. It's like, oh, now I know they don't look up and say, look at all those bodies mashed together up top, just above me there. Yeah, no. I got scrummed, crushed. So needless to say, I went back to racket sports. Dave Barry, hockey is the best. Just hit the New Day opening gap. Oh my God, Darren, that's the same thing that happened to me as a kid. They got hockey puck in the face, playing street hockey, and hated it ever since. Yeah, I was at my friend's place, and you know they'd always have a hockey net in their driveway, and you'd play in the driveway, and they used to have these wicked picks. We called it a toothpick. It would be, they played on the street so many times that their wooden stick got filed into this little pick, but they used to have could do some awesome thing. And then they had a tennis ball. They used to play with the tennis ball, and everybody wanted to be the shooter, and they always wanted to put somebody in net. And I'm like, all right, I'll go in net. And they hit me square in the nuts with the ball once. I'm like, fuck you guys, I'm going home. You also. So they're like, oh, come on, just put some padding on. I'm like, oh, you just hit me in the nuts. And I'd fall down and cry, and I'd head back home. It's like, they're like, now you know why you don't want to be the guy that goes into the net. I had no protection. I just stood there and got my shot right in the nads. They thought it was funny as hell because, you know, as young boys, you totally think that's hilarious. You missed the joke. Netball is only for the ladies. Oh, I was going to say, I've seen my cousin's kids playing netball, and they're girls. So netball's only for girls. Volleyball. We have a volleyball here too. You guys ever played volleyball? Man, that's some. When I was at the fire hall up north, we played volleyball. Look, watch this here now. Watch this here. You want to see that close below? Watch that. Put your same entrance, and we did all this stuff up here. Rinse and repeat, folks. Rinse and repeat. Or at least watch it on your live account. Watch it on your demo account. See if it acts the same way. Watch it. Wish you all a nice weekend. Take care. See you later, Kitty. Have an awesome weekend. You and Christo. Or Christian, sorry. Watch this. 2, 1. We have trade below. Come back up inside. Stop loss goes above. Oh, it didn't get me in there. Do you see that? It rolled over me. Tap that. The spread opened up wide enough. Come on, you get me in. Now it's got me in. Now, if it rushes through and takes me out, I'm out. That's sometimes you lose. Rejection. Don't stress out of it. If you take a hit, you take a hit. They're not always going to work. So we'll wait and see within text 10 seconds. If I'm on the wrong side again, we'll find out, and I can get out right. Come on, there you go. Now if it comes back over that high again, I'm out. If it comes back to me, I'm out right there. Now I'm out. See, break even. Fail safe. That's your fail safe. If it keeps going higher now, like it's gonna, your stop loss would have been taken right there. See how the fail safe works? If you're on the wrong side of it, Fail-safe saves you. That's a great example of it right there, working deliciously. So that whole loss I had up there, if I was right, I will be like nailing that. If I'm wrong and it continues to the upside, fail safe. Didn't cost us anything. $591 looks juicy. Yeah, that's that. What I was hoping wasn't going to happen is up here. 636. Now I'm expecting another wick, bunch of wicks coming in here, and then next week, I'll tell you, next week is 16, 17, 19, and 21. We got some swings happening next week, my friends. On the daily, we have some swings happening. Come back next week. I'll share with you the swings. Monday will be a good deciding one because then we'll find out what's happening on Tuesday. I really want to short this so bad. Yeah, I want to too, but it's not giving it to us. And when we try to short it, we can get out, wait for the next order, wait for the next situation to happen. Again, take that high of it, not the low of it. If you took the low, you came back out, it would not have come back to your low, so you would not have broke even. That's why you take the high part of it when you come into it from above. When you go into it from below, you take the low. Because if you're wrong and it starts to run through you, then, or if it's wrong and you want to go short, you take the high. If you want to go long, you want to take the low. In case you're wrong, then it will come back through you to go high. So just think about where you put it on either side of the fair value gap will be your place that you will break even. If you choose to take the opposing side because you want to get in it, you're willing to take that loss versus the whole stop loss. Okay, short gap. Your mic is very low. Sorry, I keep going away from my mic here. I was looking at this, Russell, Len. I was looking at this as a Cam 1 model at 104. Here's your consolidation. Here's your consolidation, the leg that takes out the consolidation right here. That's a Cam 3. So you have a Cam 1 is a return to that. So as soon as the body breaks above it, right there, comes back into it right there. There's your Cam 1 model entry. Did it hit it? Nope. You still didn't get it. It was right there, so close. That was a Cam 1 model entry from there to here. Cam 2 model is your consolidation, if this is your consolidation right here. Take 50% of the consolidation back to here. And a Cam 3 was the leg that takes out that consolidation. You take 50% of that. And then your fail-safe models are used inside that based on a 50%. If you trade below it, come back to it, or if there's an inversion there. Again, stick around. I'll show you how to finesse your Cam model entries. So that would have been a nice Cam model. Actually, if it come back and tapped it, then you're aiming for here, here, and higher. This, if you're looking at this as your consolidation, for that 1 o'clock returning back into it, you have a bold candle, get above, come back in, 1, 2, back to the body here. Your consolidation would be from this low to that high. So Cam model 1 and a Cam model 2, would you have added 2 there? Equilibrium, yep, there's your model 2, right on the money. Perfect Cam 2 right there. And that's those people who really look for Cam model entries and say, I'm going to get really good at doing my cams. That's my setup. That's my bread and butter setup. Your ones were in there. Your twos were right on the money. You start getting a nice reaction off of that. The moment you break that high, your CAM2 models slam up to break even. Start paying yourself there. And as soon as you start to make new highs and you get a fair value gap forming above you, your stop loss goes down here. Here's that reversal happening again. If we get a body trade below it, back into it, this long that you were taking here, you get out right there. This is going to fly in the face of your old traditional, reaching for these old highs up here. I'm literally showing you how to stay on the horse and when you're going to get flipped off the horse, or when you run the risk of saying, I didn't get my high I was looking for. It reversed on you. You ignored it. And then it went all the way back through your stop loss, or went all the way back through and you were hugely underwater. The fail-safe is seriously going to save you guys a world of hurt. Or if you don't have a fail-safe, my suggestion is work on one. So you see how they keep driving down there? So for a nice little reversal. Is that at 25% again? No. So I want to see this stay in 25% and come back in here again. This would be nice to see this little wick on Monday pop back up into here, maybe even at 50%, start coming back down. Dig into this daily, find some support, start eating through here. I want to see it revisit this this low overall, or at least this breaker, or at least come back into 50% of the range that's created here. 50% would be fine for me, because there's PD arrays like galore in there. So we'll keep your eye on that. Invest. Pay attention to D when he discusses rejection blocks. Maybe he can give you a quick review. Cambo he's drank the Kool-Aid, man. He's fully invested into the rejection block. Good for you, man. 518 candle. 518 candle. It might be a different one on your chart. You might be having a different time on your broker feed. 594, 550 at Brian. This will save you, and you will forever be grateful. Yeah, Lambo's starting to see the joy of those rejection blocks. I tell you, so many times they'll hit them. And here's lots of great examples. Rejection block. Came back up, hit it. Came all the way back down into a discount array. Came back up, hit the rejection block again. Came all the way back through and took a stop loss out down here. And never took the high out. Over and over again. Rejection blocks. Pay yourself at rejection blocks. And we caught this run that's still being supported to the upside right here. Right when we said it happened, we got out for a short right there. And look at this. If you caught it right away and stayed in it, you have not found a reason to get out of it yet. We do not have a body trade below that candle. See it right there? No body. You're still in. Your fail safe, or your stop loss, which is here. Your fail safe did not get activated, so you're still going higher. Now you have a new fair value gap and a new fair value gap. So now your stop loss moves to here. And if you trade below this, come back into it, you're out. And you got from here to here. You're still in the trade. This is how you stay in a trade longer term. All the time it's being supported to the upside and nothing's reversing yet, you're still in the trade. So it's a way to protect yourself and say, okay, how do I pick these long trades? How do I stay in a trade for a long period of time? When do I get out? Well, here's how you get out. Wait for the reversal to happen. Wait for the algorithm to switch and come back the other way. Sounds simple? Yeah. Attach your brain to that when you start saying big profits over here, and then the greed factor kicks in and you go, I'm going to lose it. And all that negative shit starts coming into your head. Just follow the rules. Ones and zeros. Michael's talking about this. You will get so binary this becomes boring to you. It's not boring to me. That's why I'm nowhere near that level yet. But here's an example of how you manage your trade on the way up using your fail-safe as that dynamic trailing stop loss. It's not like a regular trailing stop loss, because if you're trailing it, it's always going to be at a set point, which doesn't give you any versatility. It's just a set point that trails up behind you. Trailing stop losses are crap. Now, a trailing fail-safe, delicious. Absolutely delicious. You will love that one like you love rejection blocks. Trust me, Lambo. You're going to love them. Just took out the body, not the wick. High. I'm at 104 New York time. Okay, sorry. 104 New York time. 104 right here. 104 right there, that candle. Order block, trade above it, come back to it. I like that. If you're finding this is a propulsion candle and you continue to propel off of that, you've got some support here and it continues to build on that, you can say, yeah, sure. I'm not quite sure what you're going for, Russell, but if you're looking at that as an order block validation, absolutely. Continue to the upside. Fernando says, thanks for sharing. It's really awesome. Understand and operate with your guidance. Well, I'm glad it helps you, Fernando. I like it. I'm happy to help. About to take out a pre-market high. High lines up with a 1 hour breaker. 1 hour breaker, says David. 1 hour breaker, says David. See this right here? There's your 1 hour fair value gap. Breaking structure to the upside. We have last hour we went up above it. This hour we have not come back into it to go long. So unfortunately you wouldn't have been in on that. But in the 1 minute we would have been on it down here. See how here, look where that appears in your 1 hour chart. This right here happens down here. So this upside run you caught in a 1 minute chart here, where the hour long people were waiting for it to break up here, and then they were waiting for it to trade back to here. They wanted it to return into this fair value gap so they could get long, if you're trading off of that basic principle there. But we caught it down here on the 1 minute, right there, and you saw me get in and out right there. It's amazing when you see it clearer, when you study price action on a 1 minute candle cleanly, minute by minute, array to array, you will see when the market takes a turn. It will show up. About to take out personal high lines of blah, blah, the gap. I mean, that's what I was aiming for. So, oh, that's what you're aiming for, John. Okay, excellent. I'm glad it worked for you. Terry Sullivan, London high. Back here. So look for London high, the fill of that fair value gap there on the hourly, which is right there, just above us. Now wait for the reversal. So I think it's Invest who's just chomping at the bit to get in on a short. So when you see this running up for a significant high like London's high, and we sweep that and we get our setup on the 1 minute, these guys won't see it. And all you're doing is reversing back down into here. These guys couldn't get in on it yet. Meanwhile, you're going to see, you saw it here, and you're going to see it up here first as soon as we swing that high. So start getting excited about all this when you see that high get taken and that high get taken. But wait for the setup to happen, and you're going to catch it with that ideal entry. And if it doesn't work, you get out. You just keep getting in and getting out, getting in, getting out at break even, break even, break even. Hopefully break even. It doesn't rip through your stop loss. And then you catch it. And once you catch it and you're in a logical higher time frame objective, and then you've got a higher time frame discount objective, let it buck. Get yourself to break even, walk away from your charts, come back in an hour and see if it's hit it. That way you won't have to worry about your mind doing the nasty on you. Okay, we're at 11 o'clock my time. I got to start calling this quits. I really enjoyed calling the charts with you guys today. Come back from here. Yes, it could definitely come back from there, Terry. I agree with you. I was looking for the 21st. Oh, you were looking at the 21st. Oh, you're looking way up here. This one right here on the 22nd is a breaker. We blew right through the midpoint of that breaker right there. You wanted it to stop there and come back down, but it started continuing forward. Rejection block, we're way above the high now. We've taken the high out right there. Look for a break below market short. Look for this to run here. If you got two of them, here's that two fair value gap theory that I'm still working on. 1, 2. If we get a bold candle that rips through 1 and 2, take the second one. Your stop loss is still going to have to go up there. It still has to be 1%. Take the second one, because you may just get a return to the second one and really get some intentions of getting out of here. If you just get through 1, we close below 1 and then come back into it. Use that first one for your short. Don't forget you've got a breaker inside of fair value gap here. That is a nice, delicious place to enter in for a different type of trade. Another setup is happening in here right now. This one punched through and it closes. There you go. So now you go short here. Sell short there. Your stop loss goes up here. So if you're wrong, give yourself some leeway. You can do a short right there, short right there. Chances are, ooh, one of you would have got in here or here if you would have got 1, 2, 3. And as soon as it hits that, take some money out there, move to break even. See, quick, easy money. You've just made quick money right there. In 2 minutes, from wherever you're at there, from there's 99 down to here's 88, there's 11 handles. 11 handles, quick, in 2 minutes, you made 11 handles. Rejection, breaker. So are you taking some off at the breaker high, the open, or the mean threshold? It's hit all three of them right there. Now it can come all the way back up in here. Breaker to breaker. Swing point, breaker, breaker. Now run all the way back up. And you'll say, damn, why didn't I take it out at the breaker? Do I always have to take it out rejection blocks? Hell no. There's the range. That's a breaker. It's a senior candle. It's a fair value gap and a discount. Pay yourself. Pay yourself. Move. Pull your fib tool. Use your fib tool on the way down again. What method are you using to pay yourself? If you're fibbing it on the way down, you're just chuckling to yourself right now. There's your fib tool rule. You got in right in here. Well, that's right at 50%. So you get 62, move to 50, break even. Get to 70, move to 62. It comes down to here. You pay yourself there, and then it finally comes back up and took you out. So you get all that as profit. From there's all your profit. Now you're looking to get back in, load in again, and start the whole thing over. And you do all this shit that we did down in here. Over. You just get to keep collecting off of this fair value gap we've got doing here. Pay yourself, come back, play it again. Pay yourself, come back, play it again. And again, all you're doing is building a buffer in case it ends up running really quick against you and takes you out. This is all, you're building your nest, a buffer. In case this trade goes against you, then everything that you made in here, you can use as a buffer for this gap right here, if you're wrong. It's playing chess now. You're using this stuff. You're saying, okay, I've got this fair value gap out here. Yeah, it could run up there, and that would take out my high. But if I build a buffer by collecting money down here, that builds me a buffer so that if my stop loss does get taken, then I didn't lose anything, because this is just collecting money for me to build my nest, my padding in here. That's ideally where I want it to go, but I'm going to give it some wiggle room. And that wiggle room, I'm earning that wiggle room down here by quickly collecting off of here as it comes back to revisit me. And if it never does and takes off, that's okay. I paid myself there. Again, that's just a mindset that you want to get into. So it's playing chess, really strategically watching the charts now and saying, how do I like this right here. How do I make some money to protect myself there? Well, I think I'll just take it right off of here. I'm just going to collect a couple of times. If it comes back in there, I'll collect it once right there, twice right there, back into this order block. So you got 1, 2, that's padding enough to save you from here. If it trades above that order block, comes back to it, then you get out. Because now you're above this and you're going to go higher. Does that make sense? That's being grandmaster chess kind of playing. That's thinking ahead of the game, and you're trying to plan for this. And got a buffer here. Here's an opportunity for me to build a buffer to protect myself, where I can say, yeah, I could run up in here. How do I protect that? I can either get the full loss, but if you see there's an opportunity for you to build that buffer there before it happens, you'll get it. It'll come to you, folks. It'll come to you. Workout Warrior, see you later, buddy. I demoed that one, $200 Monopoly money. Way to go. Good work, man. You caught it. And that's why you've been practicing that, David. Or Dave, sorry. I'm so glad that you nailed it. You're finally seeing it on the charts in the past, and you're using that to now produce a demo that you're proving. Now, when and if you ever decide to get to your live account, then you can decide from there whether or not you want to go live on that. And if you practice it enough times with your fail-safe in your demo account, you should feel pretty confident making that trade in your live account. So here's the buffer. It just came back to me here. I want this to be the next price leg down. So I don't want to see it get too high. This breaker, I'll let it come into the 2-minute breaker here. I even let it touch that. If it starts to dig all the way back into that, I don't want to see that. If it hits the rejection block, I'll take a big hit, a much bigger hit on this, because I'm not going to use the fail-safe here. I'm going to give it some wiggle room in here, because inside that range from there to there, we are in premium, and we just came up. So now I don't want it to go below. Get this damn thing out of here. Now I don't want it to go above there. Actually, I'll take some profits here. Cover my trade. Look for a rejection. So we got what, 1 on there. I just want to show you how you can just nibble out some profits. And what would that be? If I had to take profit down here, that'd be $170. That's $170 right there. And I'm now at $15. It's at least paid me and give me and my wife some coffee money. If that was live, you'd be doing that live. I just want to show you that you can move to break or stress-free trading as quick as you can if you want. Some people will say, oh, you're moving your stop loss too quickly. Say, no, I'm just now I'm in the premium array. Now I want to go back to a discount array, and I want this to be a new price leg. If it doesn't give me what I want, then I get out. It does what I want it to do. I'm not going to respond to what it wants to do. You come to me, give me what I want, or I'm out. And I'm going to move that guy to the top of that guy right there. So that order block's been validated right there. I don't want to see the mean threshold get taken out now. I want to see it stop right there and come back down. If it takes me out, I just made 35 bucks. Some people work for 35 bucks an hour. We're going to get 35 bucks in 2 minutes. There you go. So now you go, okay, let's do a rinse and repeat. Come back up here. Or let's just see how this acts up here. But you do a rinse and repeat, drop back in here again, and play the same trade all over again. As soon as it drops below here, pay yourself. You're in a consolidation now, so snatch as much as you can. And you are not in a super high premium array right now. There's 50%, so you're really not, you're on the 50% mark, so it's not really doing you any favors. Wait till you get up into here, trade off of this, and use that mean threshold or the rejection block as your failsafe. Your failsafe doesn't always have to be below these things. Failsafes can be at a specific point that if you break it, come back to it, you're out. Use that. Failsafes are not just based on a fair value gap. It's on a price point. That's the truth behind your failsafe. It's a price point. Look at that, right off of that breaker. So drop one in here. If we lose the mean threshold, this could be one of those, just come up to the rejection block and then continue on down. I don't want to lose the breaker on a close, so that will be the fail safe. There's not much left there. It's probably just going to take me out, but that's the fail safe. That needs to hold as a breaker. It's a senior candle, so I'm expecting it to hold price and continue down. And then if I get back into here, I'll start slamming this sucker up tight to it because we're in a smaller range, and I'm heading back into a discount inside here. I want to get below that 50% level, which was right there. These fakers. All right, so now I'm pulling this to here. I don't want to lose that now. I've already visited it once. So now if it comes up and takes me out, that's only a $45 loss. I don't want it to go any higher than that mean threshold. You've tapped it. I don't want to see you tap it again. There's the rejection. Cancel this. Now it's starting to, we're not getting that snappy retort off of this thing that we wanted, right? So now we had a body trade above it. So ideally we'd say we're going to continue to the upside. I wanted to give it some slack. It didn't give it to me. I wanted to see a reaction off of this. It didn't give it to me. Started working it up through, going, okay, my line in the sand is the breaker, is the mean threshold here. Otherwise, we're going to keep pushing higher. We got the proof here that we're going up higher. I just wanted to see if that would really hold. So the modification to the fail-safe rule obviously doesn't work there. So the fail-safe had to be, for me, the line in the sand there. And it literally would have came up and took my rejection block anyway. And you see how the rejection, it does not take out the high. If this turns around and comes all the way back down, Lambo's going to be sitting there shaking his head saying, Darren, you've got to know about let me tell you about the rejection block, my friend. You really got to be careful about rejection blocks. So we want to see this break here on the downside. Even though we haven't taken a high out yet, you want to see that break on the downside. Ideally, you want to see the high get taken out first before it does this. No, ideally, you should see that. You shouldn't rely on this one being the swing point if you haven't taken it. I guess you have right there. Forget that. Yeah, you've taken a swing point there. So you want to get below this, come up to it, find support, start paying yourself at these points along the way. Okay, that's it for me, man. I'm gonna move to the sidelines, and I'm gonna go and get a little walk around outside. You guys enjoy your weekend. I hope you got to learn something today. If you did, hit the like button. If you like what we're doing here and you haven't subscribed yet, by all means, pop in. If you want to meet us after hours for a chat, meet us up on the Telegram chat. You can see that up top in the link section. And I will see you guys on either sometime this weekend on Telegram, or I'll see you on Monday. All the best. That'll be my last week. I'm going to trade, then I'm going to take a week off. Then I won't be back till like April 8th or something like that. So I wish you guys all the best, and I will see you. Have a safe weekend. I love you all. Thank you again for spending your time with me. It is much appreciated. And I'll see you guys on Monday. See ya.